Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. Get my intro music playing here. Happy CPI day. I'm writing down notes here for EdgeFinder dev team. I was looking at this inflation data. I think it'd be cool to have the forecasts versus actuals. Forecasts, actuals, etc. on CPI page. Sometimes I do a lot of my brainstorming for the EdgeFinder as I'm doing content, which is a really weird timing to do it, but it's because I'm thinking about what I'm about to say, and then I'm like, well, it'd be nice if we could see this data point. And that's pretty much how the EdgeFinder has been built over the last few years. Guys, we've got just about 10 minutes to go here. A little over 10 minutes before we get the awaited consumer price index. So the consumer price index will give us an inside look into what inflation in the United States is currently looking like. Now, I just had a chart pulled up as you stopped in here. On this inflation data CPI year over year. And what you can see here just by looking at it very quickly is that we have had a pretty nice progress bar here towards that target of 2%. So the 2% inflation target here, we're getting closer. Are we there yet? No, but we're getting closer. And we've come a long way from where we were, a couple of years ago. So with inflation coming down and the jobs data also showing signs of cooling, it's very clear that this month the Fed is going to cut rates. The debate and what markets are most interested in right now is whether or not the Fed rate cuts are going to come in quickly or they're going to come in slowly. Now, some would argue that slowly is the more stable and promising place to be at with rate cuts. But it all depends on what the data is coming in as. If you start seeing the labor market come down quicker, or you see inflation data give more room to cut rates, I would actually make the argument. And I'm cautious on the indices right now, but if you get something today where you get a real low print on inflation, it's going to be taken as bullish, most likely, in my view, because then it just gives the Fed all the possible green lights to say, okay, we can cut that rate pretty aggressively. And there's even the possibility that if you get a very low CPI this morning, the Fed may potentially choose to cut rates by 50 basis points. I don't think that's very likely. I still think most likely we get a 25 basis point cut, but you have to acknowledge when it comes to markets, the possibility of what could happen if you get certain data points to fall certain ways. So as we approach CPI, guys, we're going to be taking a look at some charts briefly, just to look at price action, where we're at going into this. Gold is hovering just below the all-time high. I'm currently in longs. I've been in for about the last 2 weeks, and I'm curious to see if we can get a breakout here. If you get some strength on this, what would get that to happen? CPI going down. If CPI is less than or equal to 2.5%, which is the current forecast year over year, right? If there's a 2.5% or less CPI here this morning, my best guess, educated guess, would be gold pushes through the highs. But if this is the other way, meaning let's say it's greater than 2.5% year over year, gold's probably going to stall out here and will stay in this range. That would be my alternative guess. For those watching gold, that is the simple way I can break down CPI this morning. If you get a low print, gold probably breaks out. If we get a higher print, gold probably goes nowhere. And 2.5% is the number to beat one way or the other. Now, again, I don't know where it's going to go. And you're going to see people right now. You can look in the comment section and you'll find people saying, buy gold, sell indices, buy the euro, sell the dollar. Nobody knows what's going to happen with the data, right? If they did, they wouldn't be on a YouTube stream commenting buy gold, right? Or sell gold or whatever. That's not really how we do things around here. I know that live streams like this typically draw a bigger crowd. We got 900 people watching us between Twitter and YouTube. Let me just encourage you, the people who are rational listening to this, don't gamble on the news events. We don't know what's going to happen with the CPI. True, market analysis means you take a look at what the data actually is telling us about the economy, and you do the hard work in trading of trying to understand how does a low CPI print or high CPI print, what does that actually tell us about where the economy is at? And how could that impact certain sectors, commodities like gold? How could it impact the dollar? Do the hard work. Don't do the gambling work of YouTube where you just see people say, oh, sell gold is going to go down. Nobody knows, right? We do not know what is going to happen with CPI, and that is a fool's game. And if you play that game long enough, you'll lose all your money. So just a little bit of tough love for you, because again, I've seen this, guys. I've been doing these live streams since 2018. I can name off like thousands of different instances where I get a comment from somebody who's like, I went all in on CPI because I thought it was going to go down, and then they blow all their money, right? So please don't be one of them. I've done this for a long time. I'm not the greatest trader of history by any means, but I've got some veteran experience in this stuff. Don't gamble on news. It's a stupid thing to do. So anyways, yeah. If you want to gamble, go to the casino. Don't play in the markets. Okay, so S&P 500 going into the event, we've seen a nice bounce back, but this bounce back is hinging upon where CPI falls today. Let me give you a bear case really quick, because I'm a little bit cautious on the indices myself. I don't have a big short or long on the S&P 500 at this time, but I'm a bit cautious. Here's where I'm a little bit worried about CPI. If CPI comes in higher than expected and it takes away, let's say it comes in at like 2.5 or 2, really what would get the market spooked in my view would be like a 2.7. But if you get a CPI that's not coming down very quickly, then it may push back on the rate cut plan, and that could really shoot the market lower, especially during September seasonality. We just had, the debates last night. There's election uncertainty. There's plenty of potential catalysts and volatility that could, move the market sharply lower at any moment. September is historically a seasonally weak time. We've gone over this many times on the show, but I'll just mention this one more time to you. Seasonally, we are in the worst month of the year for S&P 500 performance. Take a look here. You can see that in the month of September, we historically see negative price performance for the indices. That does not mean that we have to go down today, but I'm saying if you get a surprise hotter than expected CPI, just be very careful, because indices could slide pretty hard, especially given the backdrop of a September seasonality, which is leaning bearish. So be very careful on that. On the indices, the NASDAQ, same story, right? We've put in a potential lower high. The reason I say potential is because we haven't closed a lower low to really confirm that. But there is pretty good, case here to be made that sellers are somewhat strong, right? We've seen big sell candles come in. We've had this retracement for the last few days. Today, we have the potential chance to reverse course and start taking out these highs and start, trending. I would say that NASDAQ looks strong, looks healthy if you can sort of break this lower high concept. If you can get, a price breakout through those highs, then confidence is really restored in the bull market rally. But if there's any sort of, rollover or we take out the lows, I would not be surprised to see us go back and test those August lows. In fact, right now, that's kind of where I lean towards where we're going. That being said, I don't know what the CPI print's going to be. If CPI comes in real low, NASDAQ's probably off to the races. So I lean a certain way, but I'm not betting hard just because I feel, or just because the data is telling me one thing. Things can change. CPI is a volatile event for a good reason. We've got just about 4 minutes to go on the CPI print. Dollar index is the next one I wanted to cover briefly with you guys. So if CPI comes in higher than expected, let's say 2.6, 2.7, 2.8. If you get that, the dollar index very well could take out these highs here and maybe make a stab into the 102 level again. And perhaps we make a little bit more of a longer term low here. Maybe this double bottom actually kind of solidifies and we see a little bit more price to the upside. That being said, same thing with the dollar index. So triggers here would be a higher than expected CPI, a breakout through price action would be short-term bullish in my view. And bearish triggers would be if you get a very cool CPI and we can actually take out the lows for the dollar index, then I think you see fresh selling. So what I'm looking for on the dollar index, you might have just said, Nick, you just said it could go up or it could go down. But what I'm telling you is that if we get a number as our catalyst that is very higher or lower than expectations, plus price action breakouts, the continuation play is what I am looking for. So again, you could just say, Nick, you just said it could go up or down. But what I'm saying is that with the right catalyst and the right breakout, some of these charts set up for really good trading opportunities for continuation plays. So I'm waiting to see here. The dollar index is kind of ranging, right? If you're looking at gold, we know that's ranging, right? We've looked at the daily chart on that. This thing, I've been in this trade for a few weeks. So I could tell you it has been ranging. So we've gone nowhere. We've just gone sideways. Unless you're, trading like the 1 hour, the 4 hour, I'm sure there's been more movement there. But still, it's been, we haven't made any decisive breakouts off of the daily chart level. So keeping an eye on that. We've got just a few minutes to go. We've got almost 1,400 people watching us between all of the different places that we are live streaming to. I want to ask a favor of you guys. If you're enjoying the show or, enjoying this content, it is free to YouTube. We don't ask anything except for hit the subscribe button, the follow button, the like button, wherever you are, Twitter, YouTube. Help us out to support the show. We're doing our best here to cover this stuff. And also, we will have more guests coming on later. Stick around. Give us a shot to share more value. We've got other hosts that are going to take over the show at some point too. I want to ask you guys one other thing. Don't leave right after the spike. A lot of times we call them the spike junkies around here. Spike junkies come to watch the news, they gamble on it, and then they go home after the gambling event is over. Don't be that person. Stick around. We're going to do some in-depth analysis of what the CPI data tells us just after the number comes out. We'll go through the numbers together. We'll try and better understand, what this is actually telling us. So don't be one of the people that just leaves right after the spike. I'm telling you, it is there's value in kind of actually interpreting the data rather than just gambling the spike. Again, long-term traders, people who want to do this for the long term, give us a few minutes to break it down after the CPI. We've got about 1 minute to go, guys. What I've done here on the chart here is I've added 8 different charts for us to watch lots of different markets, because I know there's traders that trade all sorts of different things. We've got the S&P 500 in the top left. We've got the Dow Jones in the bottom left. You got the NASDAQ in the center here. You've got the dollar index bottom here. Euro dollar, pound dollar. Gold is in the top right. Oil is in the bottom right. You've got all your different charts here on the screen so that we can watch the reaction. These are 1 hour charts, so we'll get to see price movements. We got about 30 seconds. Please trade carefully, and we'll have a look at the numbers together and do a bit of analysis post CPI. Coming in with our breaking news. All right, about 10 seconds to go. And we'll see what CPI brings us. All right, initial reaction here is blips lower, dollar index is higher. CPI, dollar index higher, S&P flat, NAS flat, euro dollar down, pound dollar down, gold mixed. There goes the euro and the pound. Dollar index is up. Let's have a look at the numbers. Looks like it might have been a 2.6, 2.7 headline. That's my guess. 2.6, 2.7. Okay, actually 2.5. So 2.5 core CPI, however, was higher than expected. So we did get the 2.5% reading. S&P 500 a little bit lower on that. US 30, so Dow Jones also lower. You get the NASDAQ a little bit lower. Dollar index is up on this data point. arguably that would be, hold on, let me get the year over year. FX Street. Let's pull up FX Street economic calendar. Okay, so core, I'm looking for the core year over year. Consumer price index, X food and energy core year over year, 3.2. Okay, so came in as consensus expected. We had the consumer price. So core came in line 3.2% year over year. The consumer price index year over year came in 2.5%. Consensus had it at 2.5 or 2.6. I saw it a couple different ways, different places. So inflation cooler than anticipated on this side, at least. 0.3% month over month for core. So a slight uptick from expectations there. Interestingly, NAS and S&P, they're not a huge sell-off today. It's not a huge reaction. You got a 0.4 for the NASDAQ, 0.4 for lower on the S&P 500. Gold here, slightly lower. I'm interested in understanding that a little bit better. So 2.5% came in as the year over year number. That's a big drop from 2.9%. I would actually say that that's, arguably pretty good news for stocks. Perhaps it's that core CPI just upticking a little bit here and not looking as promising. Remember, core CPI is when you take out the food and energy components of it, which are the more volatile components of the consumer price index. So the core CPI here slightly higher. It seems like it was basically an as expected reading, to be honest. The forecast was 2.5. We've got 2.5 here. Dollar index is slightly higher. NAS and S&P 500 are slightly lower, but really not making all that big of a move. Let's switch back over to our main market view. Get a little bit of a closer look at this. So 2.5%, again, not quite enough to get gold to break through the highs. If we take a look at the S&P 500, not enough here to really get a huge price movement going on the S&P. The NASDAQ also modestly lower here. The Dow Jones a little bit lower. Russell down 1%. So some areas getting hit harder than others. And we could take a look at some, just for a brief second here, take a look at some sectors. Let's just see how technology is looking here this morning. So technology is just modestly lower. Utilities, nothing. XLY, so that's discretionary. Healthcare, staples. Interesting. Yeah, kind of a muted response, to be honest, guys. Down 0.4% for S&P 500. NASDAQ down 0.4%. This actually probably is, if you were somebody who bought puts or bought calls, this is definitely not your day, because this is, volatility is probably getting crushed. Let's see. Well, actually, look at that. Volatility spiked in both directions. Interestingly, again, gold slightly lower here on the 30-minute chart. Take a look at the 4-hour chart. Still, yet again, this will be how many times has this happened? 1, 2, 3, 4, 5, 6, 7, 8 different times. Prices come up to this area and rejected off of it. To be fair, each time it's come down to this area of support, buyers have aggressively bought it there. So, gold is really stuck in a range, it seems. It cannot really get out of its own way. Can't seem to break out. And I was hoping that, CPI would give us enough juice to move one way or the other. But gold continues to range. I continue to hold on to it. Mention of health. XLV is an ETF that tracks healthcare. Won't you look at the Nikkei? Sure. I'm short the Nikkei. It's been all over the place. I'm slightly in profit on this one. But yesterday, it shot lower, didn't quite take out the lows, reversed course here, and now I'm just about at break even. So not too exciting anything there. If we do see a drop off here in indices today, I imagine that the Nikkei will probably also follow suit. But yeah, kind of mixed on that. All right, let's see what we've got. Dollar index, again, saw an initial spike higher. Daily chart still intact here, I would say, for at least a recovery move in the short term. But the thing with the dollar index is, I really think you needed juice here to get the dollar index to break through. And I'm talking about like a 2.7, a 2.8 CPI, like a surprise of what analysts were thinking. Didn't quite get that. So for me with the dollar index, I'm just kind of neutral on this one. I think if anything, I sort of do lean bearish if we had seen a bigger retracement up, but can't really do anything with that. I want to take a look at some things here. I mentioned earlier, seasonality in the month of September keeps me a little bit worried on the indices side. It is one of the most bearish. This and October are not great months for the S&P 500. If you're someone like me who trades the indices a lot, this is worth paying attention to. Seasonality month to month. By the way, if you guys would like to try out the EdgeFinder, the software that I'm using here, which helps me look through tons of different macro data, seasonality data, the commitment of traders report, and our top setups algorithm each day. If you don't have a copy of the EdgeFinder and you'd like one, we've got a 30-day trial available you can apply for. We'll drop the link here in the chat so that you can do that now. Again, it takes like 1 minute to apply. Just tell us a little bit about what you're looking for in the software, and someone from our team will set you up with a trial for 30 days access to the EdgeFinder. So we can drop that link here in the chat, and it'd be awesome. Again, S&P 500, NASDAQ, actually close to flat off of that. When does EdgeFinder info update? Yeah, we have a full system, an automated system that pulls data all day long. If you are an EdgeFinder user, you can go to data updates and sources, but you can see we have tons of different automated scripts that are pulling data all over the place all the time. Here is the EdgeFinder, by the way. If you guys would like to try that out, you can click this link and apply there. All right, so speaking of EdgeFinder, we have a couple interesting reads here. This is the Nikkei bearish signal that I was getting a couple days back. Outside of that, it's kind of a light read. You got Euro Yen to look at as well for possible setups. Euro Yen, see, I don't really like this chart in terms of a EdgeFinder's slightly leaning bullish. Maybe it's saying, we'll get a potential kind of double bottom on this chart. But for me, I'd prefer to wait for something like this, like a breakthrough structure, breaking resistance, continue higher, that sort of thing. Let's take a look at some individual currency pairs for just a moment. The euro dollar, I was looking to buy this one, but this one fell off the EdgeFinder's radar. So it was a bullish setup. No longer is a bullish setup. So I'm glad that I didn't take any trades on this one because, again, euro dollar continuing to sink a little bit lower here this morning. So we've got euro dollar breaking the 38.2% retracement. I'm not really interested in buying this chart. From a technical perspective, I would actually be very curious to see how price reacts if it comes down to this area. If we came down to this area and EdgeFinder had a bullish confirmation, I really like that trade setup because I think it looks really clean. But we'll have to wait and see how price goes and whether or not the EdgeFinder can tick into the bullish category for euro once more. Same thing with the pound, getting closer here to a possible area of interest. 50% retracement looks interesting here. Again, when I say interesting, these are not trades that I'm looking to take simply because, again, I need that confirmation from the EdgeFinder in order to execute a position. Dollar yen support kind of trying to hold here. I'm very curious to see how the dollar yen shows up here. I also want to take just a brief moment to look at where the commitment of traders data is at. I did look at this before, but I've got to refresh my memory here. So SPX, they bought. USD, they bought. NASDAQ, they bought. And when I say they, I'm talking about institutional money. The commitment of traders data tracks hedge funds, smart money, banks, etc., and gives us an insight into what they're buying or selling. So it's a week-to-week filing that our software pulls in automatically, and you can view it here. So the Canadian dollar, the Kiwi dollar, the Japanese yen, the Russell, the pound, the Australian dollar, the SPX, US dollar, NASDAQ. These are some of the things that they bought. On the sell side, they sold a lot of commodities. They sold gold, copper, the 10-year treasury, silver, oil, and platinum. So definitely worth mentioning. We've got some sell side here on the commitment of traders data report as well. Another thing I want to just take a brief check in on is the put call ratio. See where this is at. Put call ratio fell off yesterday. Big shoot back to the upside. in stocks yesterday, or a little bit of a bounce back yesterday, a little bit of confidence restored. Remember, when the put call ratio gets extreme, we take that as more of a contrarian signal. So when you get very, very high readings on the put call ratio, that's telling you that many traders are buying puts aggressively. And we like to use that as a contrarian indicator to potentially either sell puts in my case, or perhaps get bullish on the market in the short term, talking about the stock market specifically. When this number gets really low, that tells us that investors are feeling very confident. They're being very arguably even greedy, right? And that's oftentimes a scenario in which we look to trim stops, trail stops, take partials, whatever you like to do. So right now where we're at, we're kind of back in middle ground. We're starting to get closer to extreme fear, but we didn't quite make it all the way. So one thing that could trigger extreme fear would be a breakout on the yen, right? If you get a breakout to the upside on the Japanese yen, which would cause US dollar against the Japanese yen to go down, if you get a big slide lower here, that could cause some serious concern in the market. Check back in on where things are at. We've got the S&P 500 down modestly, about 0.37%. NASDAQ's down about 0.3. Not really big moves here this morning, guys. We're not seeing anything huge. The Russell, however, continues to slide lower. You've got the Japanese stock market, which I am currently short, back to flat on the day, which is it is what it is. Kind of frustrating. It is what it is, though. Sometimes you get into a trade and it kind of fakes you out a little bit, right? We went sideways, big drop. I was looking to potentially start trailing stops, but fortunately back to break even. So we just play the waiting game. So we'll see. The Dow Jones down 0.6%, and the biggest of the U.S. Stock indices, biggest loser of the day is actually the Russell. So Russell is taking a little bit of a beating here this morning off of the CPI print, which actually surprises me. The CPI print came in. The headline was pretty good. I guess the core was slightly disappointing to investors, so perhaps just modestly, changing the outlook. You do have the 2-year yield jumping this morning, guys. That would suggest that, again, bond market participants are thinking, oh, Fed might cut rates, but slower, right? People are probably locking in a 25 basis point cut in next week's report. If they were factoring in a 50 basis point cut, it would be likely the case that you would see yields dropping much more than this. So it doesn't seem quite likely that we're going to get a 50 basis point cut, which arguably could have been the case had you have seen core CPI and CPI both lower than expectations. But expectations today, guys, were for a 2.5% CPI. So that's why you're getting kind of a muted response. I mean, stocks very modestly lower. When you get a disappointing CPI number, there's no question whether or not it was impressive or not. Stocks will move aggressively if there is a big surprise. Today, seems like the consensus is not a big surprise. Dollar index is about flat. So unfortunately for people who wanted those big breakouts to occur today, like myself, we're kind of just waiting and seeing, right? This is not a huge market mover today. We're not seeing massive volatility one way or the other. Gold is down about 0.5%. So a little bit of selling going on here. Here's your hourly chart. So you can see some hourly selling on the gold market as we tapped into resistance yet again, finding sellers. And I mean, where do I go with gold here? Nowhere. I just wait on this thing. This thing it's going to make a breakout one way or the other. I don't want to try and call exactly when and where it's going to happen. I do lean to the bullish side, but we'll have to see. This is why I have stop loss on my trade. So if price breaks this low here, if we break out through the downside, then we will take a small hit on this trade, which would be frustrating. I'm not going to lie. I've been waiting on this trade for a long time now. But if that happens, you just kind of move on. You just move to the next trade. There's nothing you can do about it, right? If you overestimate your abilities to the point where one singular trade matters too much to you, you're not trading anymore. You're just gambling, because trading involves employing an edge over many repeated iterations, risking very small per iteration to allow your edge, quote unquote, to play out over time, right? If you are making more money than you're losing, if you risk too much, one streak of losses can shut you down. You could shut your business down, right? You gotta stow away for the winter, if you will, and that is in trading equivalent to risking very small per trade so that a losing streak doesn't wipe you out. That being said, if gold does break through the highs, if we take out the highs, then that would be wonderful. I can then look to start trailing a stop loss and finally locking something in on this trade. But you might say, well, Nick, why don't you just lock something in right now? Well, the reason is because that's not how I trade. What I look for is breakouts to sort of confirm when it's time for me to lock something in. And the breakout that I've been looking for is this white dotted line, which is the all-time high on gold. I've bought near the all-time highs. I'm going to let this thing chop around. If it wants to go like this, I don't want to get stopped out while it's chopping around, right? I don't mind if this thing comes all the way down here again, like it did previously, and reverses. I'll stay in the trade in that case. I would have gotten out of this trade for a loss had it come down here and broken through the lows, but it didn't, and I was just willing to hold it. So again, I am waiting for the right breakout in order to start trailing a stop loss on the 4-hour chart. But that's my confirmation to trail stops. I don't want to do it before because I feel that I increase my chance of getting whipped out of the position. I want to wait until after a clear break happens so that I know, okay, at this point, I know I want to move a stop loss here because I don't want to see consolidation come back in. At that point, I want to see a breakout. Hopefully that makes sense, but don't ever overestimate one trade. One singular position should not define whether you're making it or breaking it as a trader. At the end of the day, it's about repeated iterations over and over and over and over. Again, wait for confirmations, wait for the fundamentals to look good, wait for the technicals to look good, execute your position, and just let it ride whatever happens and trust the process. Anyways, guys, if you guys would like to get access to our Discord, I did want to make a mention. Many of you may know Chris Pulver. He comes on the show regularly. We just launched a new Pulver Alert service where you can see his trades. You can also get access to our Discord server where we share all of our individual trades. So I'm going to just show you this really quick. This is what our Discord channel looks like. You can see the trades being taken. So if you'd like to get access to my signals, every trade that I'm taking with full context, breakdowns, explanations, screenshots, so on and so forth. I trade on live brokerages every day on live stream. I'm not here to spread false stuff about trading. I really do trade. I share my performance live on my YouTube channel. So if you would like to come trade and get the trades that I'm taking sent directly to your phone or to your desktop, you can sign up currently by sending us a direct message. So when you use this link, you'll be connected to someone on my staff who can set you up with a membership at a nice subscriber discount. So while we are live streaming, we're doing 35% off. Get 35% off the Discord group. If you'd like to get access to those signals, get access to our chat rooms, so on and so forth, you can get 35% off. If you're already a member and you'd like to get access to Pulver Alerts, please message us now using that link as well, and we can get you set up with that also. Okay, guys, we're going to take a quick break, and then Forex James taking over the show for a little bit, and we'll see what he has to say following this CPI print, causing a little bit of stir in the markets. So stay tuned. We'll be right back. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hey guys, sorry, just let me share my screen. I was a little bit behind there. Okay, so how's everyone doing? There we go. Sorry, a bit unprepared to start, but here we go. So euro dollar shorts performing very, very well after CPI. Obviously, we have now the dollar starting to push to the upside. We are still stuck I'm going to call this a consolidation because we're not creating higher highs. We're not really doing too much or even higher lows. We are still, stuck in a range technically. However, overall, we are moving to the upside. So the euro dollar shorts are still looking quite healthy. Still looking for a 25 basis point cut as we head into F.
Sorry, guys. James says that his PC just crashed. He'll be right back to come on the show. He just sent me a DM. No problem. Yeah, so I'll just pick up for just a second while we wait for James to come back. Just a heads up, James has been doing this for a while with us now. He's a veteran trader. He's been doing this for some time. He's got great insights. I love his charts. I don't know if you guys, I always think James's charts are some of the cleanest charts out there. He's got that dark, all sorts of bright colors on a dark screen. I really liked it. Anyways, Russell here is one thing I was looking at. I just wanted to mention this. So the Russell 2000 index, I've been thinking about this one. I'm like, when do I want to buy the Russell? And the thing about the Russell, which is a very volatile US index that most traders don't trade as much. The thing about the Russell is that the Russell has a tendency to go very, very strongly when things are very, very good. And every other time, it's not very impressive. So if you get like a big surge in the economy plus cooling inflation, the Russell could do really well. That looked like what we were getting here, where we had that giant surge and then things kind of fell apart recently. And so you need like perfection for the Russell to fly. But there comes a point where I think that you start getting some good value on the Russell. So I am watching this one pretty close, especially today, down another 0.5%. At one point, it was down about 1%. So keeping an eye on the Russell. You guys know I like trading this one. I'm also watching the NASDAQ, which is flat, S&P pretty much flat, and a bit of mixed reaction here today. Gold continuing to come down a little bit, so we'll keep an eye. All right, James is back. He's going to take over the show, and James, you got it.
Hey guys, sorry about that. Again, just need to share screen. Not sure what happened there. Had a little technical difficulty, but we are back and running. So as I was saying, screen. Oh, there we go. Okay, so yeah, as I was saying, the euro dollar trade still heading to the downside quite nicely. As far as I know, Credit Agricole is in their short positions and will remain in them for the foreseeable future until we get something that really sways this. But at the moment, there isn't really anything. Euro data is coming in weak. We had weaker pound data this morning. Dollar data isn't convincingly bearish, in my opinion. Obviously, we are still going to have the rate cuts. However, it's basically priced in. So unless we get some shocking rate cut news, which I highly doubt at this point, or some shocking development in the US, I don't really see anything changing. The Nikkei trade, this is almost exactly the same as Nick's. I think it's all identical, actually. Basically back at break even. We did see a nice move to the downside this morning, or this morning for me, it was 2 a.m. But yeah, unfortunately, not much of a follow through there. I am still sat in natural gas. This trade's at break even now. Not really much to say on natural gas. Very simple, straightforward trade. And we're looking to sort of find a correction somewhere of the bearish move we saw here, sort of back to the lows around here, or back to sort of resistance level. We'll see a correction around there. The dollar CAD. Now, I took this one yesterday. I think it was yesterday evening. Now, the setup on this one looks really, really nice. And this was based just off technicals. And normally I wouldn't take something like this. But the reason I did was because it was a nice hedge for the euro dollar shorts. So, and also oil as well. So we've seen oil selling off quite heavily recently. So more banking on maybe a pullback on oil, along with obviously a hedge on the dollar for euro dollar. So if we look at the technicals, we do have a quite nice fib level that lines up almost perfectly with this previous level of structure. So it's resistance, then support. Now we've broken down, looking like a retest. Now, of course, CPI came out quite positive for the dollar. So we have seen a bullish candle off here, but it's back at entry or slightly below entry. But again, I'm happy to hold it just in case we see the dollar start going crazy. I'm positioned either way. So either way, I'll make money. We've also got oil actually did see a bit of a surge. Let's see, I've not checked on oil the past couple of hours, but I know, yeah, we did have a little bit of a move to the upside in oil here. That obviously helped the position, but nothing really substantial there. Still looking for my S&P shorts. So I'm looking to short the stock markets at the moment, basically due to the US data, along with some bearish seasonality for the stock market throughout September. Just waiting for a pullback into this level of structure to meet the fib level, and then I'll be taking a short position. So pretty simple, nothing complex going on right now. Yes, the USD CAD position is just technical. James, are you bullish on the DXY next week? Are you bullish on the DXY next week with FOMC as you're bearish on euro dollar? Bullish on DXY. So I am actually neither at the moment. That's why I'm in buys and sells. So I'm positioned either way. So long term, I am bullish on the dollar. I think the dollar is an asset that you wouldn't really want to start heavily selling, or personally, I wouldn't ever want to heavily sell. I had a discussion with, I can't remember his name. It's quite a big trader, not social media wise, but quite a large trader in terms of capital. He was, certified or regulated, whatever you want to say. And one of his personal rules was never sell the dollar. Now, it's not a case of never sell the dollar ever at all. It's a case of never sell the dollar heavily. So, for example, right now, I'm not going to go super, super bearish on the dollar because, yes, we might see some downturn. But, we all know the US is a superpower. They're not going to just dump off the face of the planet. It's not going to be a situation like that. So even if we do see some short-term bearishness on the dollar, more than likely in the long term, it will be bullish again. And that's super vague. I know that's probably not that helpful. But that's just a rule that I implemented as well, is I'm never going to be super, super bearish on the dollar. And in terms of rate cuts, what we need to understand is they're already priced in. So when we if we more than likely get the 25 basis point cut, it's not going to be a case of, oh no, markets are shocked. No one expected this. Dollar's going to dump. Let's sell it. It's a case of, okay, well, everyone's been expecting this since July. And, so what? Like I said, this move that we've seen on the dollar is essentially we had a lot of weaker US data. We've also been pricing in rate cuts. So at the moment, everything's there. Everything's already on the charts. So, we'll see. But yeah, the answer to that is I'm not super bearish on the dollar. I am hedging actually more on the bullish side for the long term, which is why if you look at my euro dollar position, the stop loss, it's not huge. But, for sort of retail trading standards, it is quite large of 220 pips. I know most people in the retail space go for sort of 50 to 100, if not, 5 and 10 pip stops. So there you go. Yeah, looking to sell USD CAD too, but not enough confirmations to enter. Let me actually just pull something up here for the dollar CAD. Now, I can't remember if this is in my favor or not, so maybe I'll look a bit stupid here, but let me just double check. I'm not ashamed to look a little bit silly on stream. James, looking fresh. I see you. Thank you, Anthony. Yes, went and got a haircut this morning. Barber cancelled last minute yesterday, so had to run down this morning. Yeah, okay. So this is where I do look a little bit silly because seasonality is actually quite bullish. However, as soon as we get to at the end of September, we start flipping bearish until the mid-October. So again, I've been saying this the past couple of streams, but seasonality doesn't have much to do with economic data. So it's not super relevant because, again, we are heading into Fed cuts. Things can change. But just based on seasonality, maybe on the wrong side here or at the wrong time. But we'll see. Looking, euro pound is kind of ranging, but CPI expect bearish move. What about gold? Can you check AUD USD gold? Okay, let's take a quick look at gold. I know gold people love gold. So I was really tempted to go short on gold this morning when I saw it rejecting all-time highs again. I mean, I didn't because it would break almost all my personal rules, but it was one of those things. I was like, oh, it does look quite tempting. But yeah, didn't do it. But the only place really I'd be interested in buying gold is back at the supports. So again, I've been saying for a while, but I was long, and I keep saying that because it's one of those things. I'm a little bit annoyed, or a little bit what do you call it? Yeah, I guess annoyed is the right word. Myself being so aggressive with the stop loss, because I moved stops to break even as soon as we reached the all-time highs, and that was anticipating a larger drop for profit taking and things, but clearly that's not happened, and now we're stuck in this range. So if I get the opportunity again, I'll quite happily re-enter sort of at this support level and try again. If not, I don't really see this drop happening. Yeah, I don't really see it as realistic at the moment, but maybe a buy off this next support down here at sort of 2300. But again, not super confident that level will get hit at this point. What you guys have got to remember is that gold economically, the macro factors for gold are extremely bullish. I saw an article last night. Actually, let me see if I can find it. It's from one of my members actually, basically saying that. Yeah, here we go. Okay, let me just pull this up for you so you can read it. This is essentially what's going on with trying to replace the US dollar regarding, I think it was China and Russia, but you can see Russia has announced it will be increasing gold purchases by 700% this month. Now, I'm not sure where this is from. I've got no citation, so I'm not taking it too seriously at the moment. But I need to do some more research. But if that is the case, then it could be another factor for gold to start turning a little bit more bullish, even though it already is. So we'll see. Not planning on entering right now. Long story short. Never sell the dollar. This sounds like somebody fixes the price after a while. No, it's not the case of someone fixes the price. It's the case of the US fixes itself, essentially. I mean, there are larger problems like the debt ceiling and other factors, but generally speaking, the US historically, it's not. It's like a brick wall. Sure, you might lose a brick here and there in terms of bearishness, but overall, it's still very solid and stable. I have USD CAD long. Yeah, longs could play out. I think we might switch bullish on USD CAD, but again, it was just a hedge, and the technicals looked perfect for my strategy, so I was happy to take it. James, I've read similar elsewhere with regards to Russia, India, and Chinese banks buying gold. I know that the Chinese slowed down their purchasing. I'm not sure if they stopped, and I'm not sure on the dates. I've kind of disregarded gold for the past couple of days or past week or so. But anyway, we'll move on. So someone said dollar yen. Sure. Not sure what that's doing there. So I don't really have a bias for dollar yen at the moment. I know I said I'm a bit more bullish on the dollar, but it's not to the extent where I want to start buying this. At some points I may. However, we've dropped, I think it was 2,000 points from peak to trough. Yeah, 2,000 points. And we've not really had a significant pullback here. So, just speaking from observation, I wouldn't mind seeing some sort of move to the upside, a little correction, and then we start maybe moving to the downside in dollar yen. However, the overall factors for the yen, in my opinion, haven't really changed. I think the sentiment's changed more than the larger market factors, if that makes sense. They stopped 4 months ago. Well, I'm a bit behind on that one, aren't I? Target for gold by the end of the year, maybe 2,600. I'm not sure, to be honest. I don't really like to have end of year targets. My target long term is 3,000 for gold, but When that will happen, I don't know. I'd like to just get into gold, just buy it and hold. But at the moment, I don't really have an opportunity to do that. We can check out the Australian dollar, US dollar. Yeah, so I was looking to go long again as a hedge for euro dollar. But as I'm already in the dollar Canadian, I'm not sure I really want to get into this. But again, the technicals do look quite nice. So maybe I would take a go, although I'm not super bullish on the Australian dollar at the moment either. But again, we've got quite nice level of structure through here. Lines up quite well with the fib zone. So if we can get this 50% pullback from low to high, I'd be more than happy to try and trade this back into the high from 2023 at 0.71. Check NAS. We can check NASDAQ. Actually, let me pull up a different chart. We'll do that one. Okay, so actually, what I'm going to do for this one is pull up my research tab. So I shared this with you guys yesterday in my segment. So if you've got it, feel free to reference it, but won't be sharing it again. So on the trade ideas, now let me clarify, these aren't from elite traders. These aren't from me. These are generated from information within the research. So these aren't signals. Don't go and just start buying NASDAQ. But you can see the NASDAQ is set to benefit from continued investment in technology and AI, with leading companies like Microsoft, Nvidia, and Amazon driving gains. The index has seen a strong year-to-date performance due to high demand for digital transformation and AI-driven services, which continue to attract capital inflows while broader market volatility is expected. Tech-heavy NASDAQ remains well-positioned to outperform, especially if the Federal Reserve begins rate cuts that could reduce borrowing costs for growth stocks. So there you go. You know, just from reading a couple of sentences, starting to look bullish. And I've just noticed, actually, we've bounced off this daily 200 moving average really, really nicely. Let's see. Oh, that's a bit sad. I would, yeah, if I was paying attention, I probably would have bought this. Actually, it's again, this fib zone bounced off really nicely. We had an oversold RSI, just bounced off the 200. The analysis from my research page sounds pretty bullish. So maybe I'll start looking for a long position here. If we can get, yeah, maybe if we have a weekly bullish candle close from here, that's maybe when I'll start looking to buy. At the moment, still a little bit on the fence, not looking to buy it right now. Maybe next week it'll be a good opportunity. So there you go. That's my input on NAS. Let me just check the time. I'm not sure if anyone's on after. I think they are. What day is it? Wednesday. Okay. Oh, cool. Okay, I've still got some time. Buying UJ when USD rates will be cut is crazy. Well, depends on perspective. Remember, you can make money doing either thing. Buyers and sellers can make money in the same markets as long as they have their own edges. Hey, James, good morning. Looking fresh. What about Kiwi dollar? Thank you. I appreciate that. New Zealand dollar. Let's see. Yeah, I'm still looking to buy, although there's nothing here right now. The main thing I'm looking for is this level of support to maybe buy from. If not, then potentially we can have a look at this fib level from low to high, which also doesn't look bad. You know, we've got this sort of low down here that coincides along with these previous highs, but it's not super strong. However, seasonality backs this position up quite well so far. So you can see the orange line here on the 30th of September before this line. So, you know, in September, we're typically quite bearish. And then when we get into October, we start flipping bullish historically. So I'm not in any rush. We've still got, 20 days roughly until we get to my timeline of start buying. Euro dollar. I'm in euro dollar shorts. So you can see them here. we've not really seen too much. We've not seen a clear break of this level of support yet, which is a little bit disappointing. I'd like to see that sort of get closed below. Maybe we will today when the market starts to digest the CPI a little bit more. However, at the moment, we seem a little bit stuck. US 30. Oh, I missed pound dollar. We'll do pound dollar, and then we can go to US 30. So yeah, similar thing here. I was looking to buy this again, acting as a hedge for the euro dollar. And I might still do this depending on the dollar CAD position I've got open. If that one gets stopped out, I might try a pound dollar long. So actually the data for the sterling hasn't been too great this morning, I don't think. Let me double check. As I said, I was out this morning, so I'm a little bit behind on today's research. But let me have a little quick catch up here. Wow, it's all red for the pound, but let me just see what the context is. Trade balance. Actually, let me filter this so we don't get the junk. Oh, it was GDP month on month, flat, same as before, lower than forecast, so it's disappointing. So that's not great, actually. And Sem already bearish on the pound. It seems like maybe pound dollar is not great to buy at the moment. Probably not going to act as the best hedge. Let's see. Someone else. Oh, US 30. That was it. Let's have a quick look. Did I have anything here? Let's have a quick read. Not really. I don't really have any research for the Dow. However, yeah, at the moment, there's nothing here. There's not even a technical setup as far as I'm concerned. I would really like to see price come lower to come and meet this 200 moving average. So we could come, hit this fib level, meet the 200, and then bounce to the upside. Obviously, that's in a perfect world. We'll see. But at the moment, not really seen anything for the past, 1, 2, 3, 4 days. It's been pretty consolidating, really. So there's not much I can really tell you on that one. USD JPY, we've already covered that one. Essentially not looking to really do anything, not looking to buy or sell the dollar yen. If we look, the dollar is stuck in a range, and the yen actually is showing a little bit of rejection here. If you're quite aggressive, maybe a dollar yen long might not be a bad idea, but that's, a very brief idea, and that's not really accounting for anything. That's more just a price action thing. So be very, very careful if you are trying to long the dollar yen. Thoughts on silver? Let's take a look. I don't really trade silver, so can't really tell you much on that. Don't know why I've got a position there. The daily looks quite nice. We are creating a higher low potentially right here. Let's draw. Is there a trend here? I suppose if you want to be a little bit looser with the trend lines, you could say we've got a trend line here along with the 200. Maybe just based off technicals, we could go for a long, something like that. Let's see, actually, if there is anything on the EdgeFinder. Commodities. Silver. Oh, it's actually bearish. Well, no, it's not. It's neutral with a -1 reading, so it's not really going either way. Retail is long, so don't really want to do that. COT data is not telling us too much. Historically, we are short. Okay, well, there you go. That's the simplicity of data already changed the bias to going short. So maybe what we do here is actually, rather than going for a long, we'd wait for more of a break and a retest thing. So we'd be more looking for a move to the downside, let the 200 cross, and then enter on the retest of this level. Something along those lines I wouldn't mind too much. Or you could go for a very similar thing off this level of support, and look for something like this. Hope that makes sense. As always, ignore the crude drawings. I'm not very good at drawing with a mouse. In fact, I'm not very good at drawing in the first place. JPN 225 pulling back heavy. That's fine. It is what it is. James, if euro dollar continues short, what's a good target? I'm looking for where am I looking for? The 1.06 level. That's Credit Agricole's target. And who am I to argue with Credit Agricole? But you can see I've got some levels already drawn up. So I've got sort of target 1, 2, and 3, essentially. I guess we could also have one sort of around here. So I don't take partials, really. That's not a huge part of my strategy. I very, very rarely take partials. But essentially, if we reach these levels, it's more a case of assessing the economics, assessing the price action. Do I want to trail stops? Do I want to get out of the trade? How do I want to manage it when we get to these individual levels? And that's essentially the approach I take. I don't have set management rules. So, for example, a lot of people have, if we reach 1% profit, I'll trail stops. If we reach 2%, I'll trail stops again. Or, for example, Nick has one where he trails stops on sort of structure. I do that as well, but it's a bit more of a not discrimination, that's the wrong word, discretionary thing. Tell you what, let's have a look at the Nikkei. Yeah, it's rejecting in a bit of an aggressive manner. Actually, I'm not too happy about that, but we're in the trade, so what can you do? Australian dollar Swiss. Yeah, I was looking to go short on this pair. However, I think I'm going to start modifying the idea a little bit. Maybe look, where does this work? Yeah. See, that doesn't look too bad already. Fib from high to low. Looks like we're rejecting previous sort of structure through here. The problem is the daily is just way too above the 200 moving average right now for me. I would quite like to target the previous low, sort of around here. So it'd be the 0.55 level. Maybe, I don't know. I'm just not too convinced of this one. I feel like the technicals are a little bit forced, or they're not strong enough because we don't have much here. We've got some highs, but you know, there's not much else there. Again, the daily's quite far away from the 200. So although I'm bearish, I just don't think I'll take it. So there you go. Unfortunately, I can't give you insights into every market because sometimes there's just nothing, or sometimes there's nothing that I would take. So I'm not going to sit there and try and tell you, oh, it's a sell, it's a buy, because it doesn't make sense to do that. Yes, we've done Australian dollar CAD already. I am in short positions. I'll put it on the screen for you. There you go. I won't go into the reasons. I've already done that. So feel free to, I think when my segment started, I covered it. So feel free to rewind about 20 minutes. Just making sure I didn't miss anything here. I don't think I did. We've also covered US 30. Feel free to rewind as always. Pound Swiss. Actually looks very similar to the Australian dollar Swiss. I don't really trade the pound Swiss. Yeah, if we look, it's just a little bit ugly. In fact, I say this about quite a lot, but I'd say it's probably one of the most ugly charts. So lots of ranging, but the movements we do get are very aggressive. So, you know, if we look here, very strong move to the downside, huge move to the downside, huge move to the downside, huge move to the downside. So you can probably catch some really good trades on this, but trying to, you know, time this chop, not something I want to be involved with, to be honest. Although, back to the point, let's see what's here. Fib from low, yeah, high to low. I suppose, yeah. let's see. I suppose actually it doesn't look too bad from the technicals. I am quite bearish on the pound. The Swiss, same opinion as the dollar. I think the Swiss is very stable. I'm not really someone to start going and dumping the Swiss. So if I can buy into the Swiss and maybe sell the GBP, it's not necessarily a bad idea. I don't really have any analysis in terms of economics to back up this position. I might do some later and see if I can get in, make sure there's obviously something to actually drive the market to the downside. But yeah, that's basically all there is for now. Euro Australian. Yes, I'm watching Euro Australian actually here. So I'm a little bit conflicted because I don't trade trend lines. I like to draw them if they're obvious, like they are in this situation, but I would never really, I very, very rarely will take a trade off a trend line unless it's sort of a weekly or a daily trend line that's holding up historically very well. So obviously it's not the case here, really. It's more of a simple lower time frame trend line, but it seems to be holding very, very well. But I would really like to see a push to the upside so I can enter off this 50% retracement from obviously high to low, and then take it down. So let me just check the seasonality on this one. I've got the orange line, but I didn't annotate it, so I'm not sure what it's for. Yeah, okay, here we go. So if we look on the Australian dollar for the past 15 years, so if we go from, let's say, the end of September until the start of November, so the 8th, we would have, if we were buying during this time, if we bought from the 29th of September until the 8th of November, every year for the past 15 years, we would have won 3 trades and lost 12. So because we're looking to go short, we flipped this, we would have won 12 and lost 3. So historically, it looks quite good to go short. It's just a little bit premature. And again, that's why I'm not taking a stab off this trend line at the moment. I'm quite happy to wait and just sort of see if we can get a slightly higher move, and then I'll start selling. Linda, my name's James. I'm not Nick. But yeah, so let's see. Okay, the S&P. I think I already went over the S&P, but I'll do it again. So looking for a short. I've been waiting for the short for 4 or 5 days now, I think. So you can see we draw the fib from high to low, and we can also look for a retest of this previous level of structure. And the economics behind this one also look quite healthy. I've got a couple of minutes left, so I've got enough time to go over this. Let me find it 1 second. So I showed this yesterday, so I apologize if this is repeating myself for some people. So we've got rising volatility and market imbalances. I'm not going to read all of this, by the way, but feel free to screenshot it if you want to read it in your own time. Weakening US economic data, valuation concerns. We've got equity market positioning, macro risks and global shutdown, interest rates and bond market dynamics. Now, also going to reference my research page here. The S&P has been trading at stretched valuations with historically high PE ratios. Slower earnings growth, especially in sectors such as technology and discretionary, along with higher input costs due to persistent inflation, could lead to a correction. The Federal Reserve's expected rate cuts may weigh on corporate profitability as higher interest rates erode margins and tighten financing conditions. The market's concentration in mega cap stocks also increase the vulnerability to any downside shocks in these key names. So I think I might have read that like a 5-year-old, but there you go. The points are still valid. So, overall, quite happy to start selling. But not right now. I'd like to first see this setup occur. Then I'll take a very low risk position. So my personal personal rule is I don't really like to short the indices markets. I will only short them if there's overwhelming data. Now, the reason I don't short them is because imagine trying to be a bear in the S&P. You would get eaten up. Look, just is, you know, what you would have had success maybe, or large success probably twice, like in sort of recent history. You know, you've got sort of 2020, 2022, 2018, and obviously you've got sort of 2008 and things, but in recent history you would have been eaten alive. So that's why I'm a little bit cautious. But yeah, I'm not targeting like 4,000. I've seen a few people talk about the 4,000 level. I'm not that much of a bear. I'm more looking just for maybe a double bottom around here. Price to come and meet this daily 200 and then a pop back to the upside. But we'll see. Again, you know, I don't want to be super bullish in a bearish market and vice versa. Oh, right, Linda. All right, that makes sense. James grew a mini beard. Yeah, the problem is because I've got a little bit Asian in me, I can't grow a proper beard, but I'm not Asian enough to not grow a beard, so I'm stuck with this half beard. But you know, can't shave it off. I've got to give it time. I'm 26, so maybe I've passed the prime of trying to grow a beard. I don't know. Maybe I'm just hanging on to something that's not there. So anyway, what's my Discord? I think Nick's dropped my Discord in the chat at some point. AUD USD, we've already covered that, but what I'll do is I'll give you a very quick rundown one more time before I go. I've got a couple of minutes left. So what are we looking at on the Australian dollar? Again, just going to reference my research document here because it's a bit easier for me. Mixed performance. The Australian dollar remains sensitive to shifts in risk sentiment driven by global commodity demand and the Reserve Bank of Australia's policy stance. While the Australian dollar has recently strengthened, concerns about China's economy and weakening commodity prices, particularly metals, have limited further gains. And this is referencing MUFG and Bank of America. RBA outlook. The RBA has maintained a cautious stance, focusing on inflationary pressures. Expectations are hawkish, that the bank will continue to monitor economic data closely, but avoid aggressive rate hikes. However, the RBA's more hawkish guidance could help support could support the AUD over time, especially against currencies like the New Zealand dollar. I suppose we should probably skip to this one. So AUD USD decouples from rates. Despite interest rate differentials, AUD has decoupled from US rate expectations, largely due to economic concerns in China and slowing global economy. So there you go. That's the sort of a little bit of the drivers behind that. So although I was bullish on the Australian dollar, kind of flipping a little bit bearish, although I should probably say a bit more flat rather than bullish. However, considering I'm already in euro dollar shorts, I am looking for something to offset the risk. So for example, if euro dollar just starts pumping, I also want to offset that with something else that will pump. So then, you know, I'm hedged either way. That's essentially what I'm trying to do. Now, Australian dollar CAD, the position that I'm in, doesn't quite do that because it's more of a short-term position, whereas euro dollar is a long-term position. So I'm looking for a 50% retracement from the low down here, obviously, to the high. So looking for this 50% move. Then I will take a stab. Again, not super convinced, but it will help. Well, sorry, should assist in offsetting some of the risk that I hold on the Australian dollar. On the US dollar, and then that's kind of it. If you're not in similar positions to me, to be honest, I wouldn't be looking to go long here. Again, just to clarify for the final time, it's just to avert some risk. It's not that I'm super bullish on AUD USD. My girlfriend hates beards. Shaving for me is compulsory. Well, yeah, I don't know. I guess that's an individual thing, isn't it? No, fine. Yeah, I think look how you want to look, man. If you're happy with the way you look, then that's good. I think your appearance has a big effect on your your work ethics and all that sort of stuff. So for example, if you look bad, you'll feel bad, you won't want to do what you need to do, you won't feel motivated to go to the gym. And also, anyway, that's going into some Andrew Tate type stuff. I'm not into all that, but I do agree with that sort of general idea. But anyway, guys, I'm running out of time here. I think I'm about a minute over time, so I appreciate you guys joining. You've been a great chat as always. Thank you, A1 guys, for having me on. I think I'm on again at some point this week, but if not, have a great week. I will see you all later. Thanks for having me.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, guys, I'm back. Good to see everyone again. Still got 760 people watching. That's how you know it's CPI day. We got a good crowd here going. Oh, let me get I gotta turn my sound on. There we go. Hopefully you can hear that now. So we got kind of an interesting mixed reaction here to CPI. We had basically flat reaction across the board. Also, let me look into our timeline today. In terms of, by the way, guys, if you ever want to check the live stream schedule, you can always do so on our website, a1trading.com/livestream-schedule. We have Ivan in the back. He might be a surprise visitor for a few minutes here. So we will we'll have to bring Ivan into the conversation. Just a quick update before we bring Ivan in. We got gold down about 0.5% here today. Dollar index about flat, sitting had a spike lower, then came back. Dow Jones is down 0.75%. Russell's down 0.5%. S&P's down just modestly, and NASDAQ is up a little bit as well. So bit of a mixed reaction. Oil is also, having a bit of a pity bounce. Almost, it's up like 1.2% after this crazy sell-off that we've seen. Bitcoin's down 1.5%. Ethereum's 2.5%. Euro flat on the day. Pound slightly lower. Dollar yen sitting at support. We'll see where that one goes here in just a minute. We'll be discussing with Ivan, who loves talking about yen pairs. In fact, he calls himself Yen Man. So Yen Man is coming up next, guys. Real quick, we'll say this. If you guys are new to the show, we have 750 people here. Do me a big favor, hit the thumbs up button, subscribe, follow on Twitter. If you're on Twitter, we got a couple different live streams at different places. So wherever you are, throw some love at the show. We do appreciate it. And here he comes. We got Yen Man. We can say hello to him and see. There he is, Yen Man. Hey, Yen Man, how are you?
I'm good.
Hey, Ivan, what's the yen gonna do next?
Continue rising or falling on the yen pairs.
Okay, yeah. So you're, I'm kind of in the same camp, man. This yen, we saw the bounce back, and here we are back to the lows. Seems like that attempt to move higher was met with a lot of sell pressure. And Ivan, tell us a little bit why. Why is the yen important to all markets? I mean, we know you love the yen, but why is the yen important not just to, currency traders who trade yen pairs, but why is it important to, people who trade gold, people who trade indices, people are watching all sorts of different markets? Why is the yen so important?
Because we trade the financial market, and in financial market, you need finance. And Japan has the lowest financing costs in the world. So that's where you get your money.
Yes, that's a good point. And Ivan, is you're pointing out for the listeners who may be newer to the fundamental side. So the Bank of Japan offers very low interest rates. And think about it. If you want to go borrow money, where do you want to borrow money at? You want to borrow money where it's cheapest to borrow money. And the Bank of Japan is kind of like the best option on the block for borrowing money. So for years now, we have seen the Bank of Japan be the piggy bank of the world, meaning everybody goes and borrows Japanese yen or sell yen to buy other assets, real estate, companies, cryptocurrencies, metals, invest in, bonds, all sorts of different things, anything except keeping it in the Japanese yen.
Mhm.
But now, with recent developments, with central banks around the world starting to cut their interest rates, and perhaps fear of a slowdown in the world, the trade has changed a little bit. Ivan, what has changed in the yen?
The Japanese CPI slash wage growth slash maybe slash growth in the economy, slight growth for the past 30 years. So I think inflation is now 2.9 or 2.8 or so. So yeah, they are getting some inflation, and then they have increased their interest rate from negative 0.1 to 0.25, which is a quarter. And they are supposed to, by end of the year, maybe hike another time to 50 basis points.
Yeah, and to kind of draw a little picture to go with your idea, I've got this on the screen. So Japan is seeing some modest growth, which Japan's economy has been like not great and been unimpressive. We've discussed this. Ivan and I have gone back and forth on Japan as a deep dive for the last year, talking about how they have an aging population, not a lot of GDP growth. They've kept their interest rates rock bottom in order to try and stimulate their economy, and they've struggled with it for a long time. That being said, a little bit of promising stuff coming into Japan, but maybe what is the bigger, more volatile component in this equation is, what if the rest of the world experiences bigger downturn? Then suddenly that very modest Japanese growth looks very attractive relative to losing a bunch of value in other places. So it kind of depends your thought. If you're somebody who's like, yeah, the world looks like it's on the fringe of finally seeing some sort of economic slowdown that's persistent, we're seeing evidence of that. If that becomes a bigger theme, maybe the Japanese currency and maybe investing in Japan, or at least just staying cash heavy, looks a little bit more attractive, causing the big sell-off that we've seen recently and the Japanese yen. So Ivan, you think there's potential for this to continue to go lower?
Absolutely. I just had to think for 2 seconds, because we saw CPI today, and I was a bit surprised by the US side of it, because as a very big opponent, it came at 2.5. So that means dollar weakness going forward. And Japan is now turning a bit higher. So I think that with this lower CPI in the US, we have more legs to go. Now, remember, it's always going to be where do you get the cheapest money for the best reward, and it has been so far one of the best carry trades has been either New Zealand or the US dollar. Now that the US will start their rate cut seasonal cycle now in September, which is now confirmed today with the lower CPI. This one is going to have not a lot of legs, but yeah, some legs, extra legs, because remember we started, was it 2020, 2021 we had a bottom, so that's 104. I'm not going to say we're going to go down to 104 on the dollar against the yen, but that's where everything started from. So we'll see.
Sure. Yeah. No, and definitely something to watch is the state of the Japanese economy, but also very closely, I think that the more volatile component is where the world economies are at. We're seeing inflation come down in the United States, continuously. Maybe a little bit of a rocky road to get there, but we're seeing inflation cool in many places, and it is expected that you're going to see other central banks starting to cut interest rates. I actually think that the big price action signal here on the yen is, if you're watching this and you're like, let's get some proof here in price action. If you get a break through those lows, we have to start really scrolling out, Ivan, to get an idea of where this thing could go. Because look at this. This is January and December of December 2023, January 2024. We have erased all of those massive gains in the dollar yen. All of that has been erased. The yen has taken back with a vengeance where it was at. And the next key level here that I see, I'm looking at this and I'm saying, wow, we could go all the way down to 138.50 pretty quick if you start to see, global economic decline sort of persist. Do you think that's a possibility that we see that by maybe end of year? I mean, I actually think that that's a very possible candidate, especially with some September seasonality. I know you and I discussed briefly the idea that stocks look a little rough in September, which can carry over into like a risk off mood in September. Could that cause dollar yen to break this low and maybe see a squeeze down to 138?
The seasonality is bearish for the dollar Japanese yen across September. Might even be until end of September. So the seller pressure isn't over. And okay, just like let me paraphrase this a bit more correctly then. Is that whatever the forces are here, which I wasn't a part of for most of it at least, the forces that are here on the dollar yen has been here ever since 10th of July and or 11th. And what is it? It is the basic exiting their carry trades, at least against the dollar. And that is a force that is generally not present every year. So the bottom can be, because I would call it an external force that's a bit, as of now, can make this one now continue falling for quite some more time. And it's just about the market where the bottom will be. I just have to mention that also the reason why dollar yen has risen so much for so long is because they have spent up to, is it 6 trillion yen a month for like, I don't know, since 2018 or something. Like they spend astronomical amount of money. I don't know what the 6 trillion is if you take them into suitcase measurements, but yeah, so a lot of money has been pumped in. Now they get some inflation. Mark is now thinking we don't believe in this theory anymore that this is going to be the funding currency. But the question is to you, Nick, who will be the funding currency going forward if yen is not going to be anymore?
That's a great question. You have potentially the Swiss franc, but I wanted to, before I answer that question, Ivan, check this out. So just to go with your analysis or what you mentioned earlier, I wanted to draw some comparisons here in terms of the inflation story. Just to add, because I know we discussed it while you were just giving that last blip there, I wanted to just show a chart here. So we have the euro, the dollar, and the Japanese yen. And these are inflation year over year rates. So what we can see here is that if you take a look at the one we talk about the most often, the dollar, the US inflation has been steadily over time here declining going into today. Then we take a look at Europe. Europe also declining, and has actually even declined the most out of the three that we've got selected: the euro, the dollar, and the yen, which are arguably the top three, or they are the top three. So then we add into another layer. Well, let's actually take a look at the Japanese economy. And it's a little bit tough to see. So what we can actually do is reduce our number of years, look back. If it works, maybe it doesn't. Either ways, we can take this off and this off. And now we get a closer look at the Japanese inflation situation. And you can actually see that while other places have seen their inflations falling, there is that stubborn persistence on Japanese inflation. And remember, inflation oftentimes it's a byproduct oftentimes of like productivity and growth. So not always, because there's also the component of like printing a ton of money can cause inflation, but you need the economy to do something in order for prices to rise. People need to be spending money, et cetera. So just wanted to add that context. Remember that rising inflation typically makes a central bank a little bit more hawkish, willing to keep rates higher, potentially even rate hike. I know the Bank of Japan has also, as Ivan and I have discussed as well, discussed the idea of wanting to raise rates. So you have a divergence here where other central banks all want to cut rates, and the Bank of Japan, meanwhile, has some rising inflation. So something to think about. We could let's just add it into the picture, the Swiss franc, which has actually seen inflation falling. So, Ivan, do you think the Swiss franc becomes the borrow currency?
Yeah.
Yeah.
What's their interest rate at the moment? 125 is their interest rate.
Mm-hmm.
And I saw somewhere, since I can find it, just in my weekly updates on the, they are likely to cut 53 by end of year. 61% likely to cut in the next meeting. So that means they're going to go from 125 to 1. And if Japan is going to go from 25 to 50, so there's 50 basis point or half a percentage point different, I think Swiss is going to be the next one because they're the one with the lowest interest rate at the moment after Switzerland. So yeah, after Japan, sorry.
Yeah, and that's always something to be thinking about, guys, is like, where is the borrow trade going to play out? And that, can create some monster currency trends. So very good points there. And I think that if you're watching yen pairs, I have this opinion, I keep saying it on the live stream with you, Ivan, is like, I just think that the time of the flowing upward trend on yen crosses, I think for now is behind us. I don't think you're going to see just a continuous updrift against the Japanese yen anymore, because the contributing factor to that we keep narrowing in on this is inflation was rising globally. Central banks were hiking rates. And that's why the Japanese yen looked so weak, because they were not hiking rates. That story has flipped. All the other central banks now wanting to cut rates. There's a possibility, Ivan, that we could be on the fringe of a longer term reversal in the Japanese yen. And I know I wish I was in this trade, but somebody else that comes on the show regularly, I'm sure you know Chris, Ivan. So Ivan, Chris has been buying the Japanese yen steadily and picking up positions before all of this happened. I'm totally jealous of him because I have no yen exposure, but I don't hate the idea of like hedging risk on by looking for pullbacks and potentially taking up just small short bets against other currencies against the yen. I don't know.
Then I need to probably look at what Chris is doing.
Yeah,
because I haven't paid attention.
Yeah, I really need to like zone in on what. But he's been talking about that. Does anybody know in the live chat? Do us a favor. If you're a regular viewer, do you guys remember Chris talking about that? I'm not even gonna lie. I judged him for that. I was like, you can just fight this uptrend like that? I don't know. And he was totally bang on right about starting to pick up a yen position during this period of time. We'll ask him about it maybe when he's on next. But yeah, I don't. I even though Ivan that he's been doing that and early to the trade, I actually think that for going forward, I don't hate the idea of being late to the trade, because I think that there's much more room to go lower if you see the global economy slow and the Japanese one look to hike rates.
Yeah, we're about 2 months late to that idea, literally on the day.
But let's think, exactly, right? But let's think about this for a second. If you were late to the idea over here, like let's say, all the central banks are starting to now hike rates and Japan is staying put, you probably would have felt like you were late right there. And then look what happened in the following years. So it's almost like with this move here, I'm not saying I go out and short the yen, the dollar yen right now. But I don't hate the idea of playing the patient game, saying, okay, what if we break? What if we retest? Or what if we bounce back up, test these areas again, small shorts, look to try and ride the bigger trend? I kind of like the idea.
I need to really think about that one, because that just throws everything I know. Everything I know. Because if my theory is that we're going to bottom around 23rd to 30th, I don't know. Okay, maybe this year is different. But no. To be honest with you, it's fun to see that other people also succeeded. In that thing. Also, the thing is, Steve, who doesn't doubt other people's opinions and matters? And you guys do it to me all the time, every day, especially when I go against Nick. But
Ivan, you're too kind. Well, we all need to kind of bow down to the Chris Pulver. He's been doing this for I think he's done it for 600 years. I think that dude is not actually a human. I think he's an android that's been here since Egyptian times, trading the sugarcane markets back then.
Oh, not the Blackberries and the Nokia 3210s.
Oh, I'm sure he used to place trades on his BlackBerry back in the day. No, we're shaming him. He's a young man still. But
can we do one thing?
yes.
Zach in the chat is saying that S&P 500 is falling. I didn't mention what was Monday or so I wanted to sell, and then I sold later in that day. And I've been in and out of that trade, or in and out of profit on that trade the whole week. And then the media yesterday hyped up the debate, or Kamala Harris and Trump is gonna drive the market in whatever direction.
Yeah.
And I'm still in it. And then CPI, I'm still in it. So yeah, I may get it back into profit now for the first time in 5 days.
Yeah, actually, same thing on my Nikkei short. I have been in and out of profit on this one, coming down a little bit here this morning. But again, I indices and gold, I'm waiting for decisive price action. You also just mentioned the debates last night. I haven't discussed it at all on stream today. It actually, regardless of feelings, put them to the side. The debate seemed to have really boosted the odds for Kamala Harris to potentially win the presidency. Of course, it is too early to tell. Things can change. Things have changed many times already in this cycle. A couple months ago, Ivan, I would have been like, oh, Trump is going to win the election. Now I'm not so sure. It seems a little bit more mixed. And, arguably, maybe the markets don't like that. Again, some people will take this opportunity to say, oh, Kamala Harris is going to win. That's why the market's selling off. I don't think it has to do with either one. I think it has to do with the market doesn't know. The market's trying to figure out, is it going to be Trump? Is it going to be Harris? And that uncertainty of where things are going based on who wins the election is enough of a concerning thing to have the markets trending a little bit lower. I mean, you also had inflation data, which I would have actually said this inflation data this morning was not bad for stocks. In fact, I'd say it was pretty good. But there's just a lot of uncertainty. September seasonality. You and I have been students of seasonality for years now. You gotta be careful you don't mess with seasonality, right?
No, but I think that if we breathe with our tummies, and what I've seen so far is that both wants to do some kind of stimulus in some way, some kind of packages, some kind of, if it's green or blue or whatever packages, as a meaning into EVs or batteries or whatever. As far as I know, both of them going to create inflation with whatever they're trying to put up as a plan. That doesn't, nobody wants that, and even Trump is going to be also on that team. So no matter who is winning, I think I would be a bit more fearful about what is the CPI implication of their policies, and that's where your brain has to be. Secondly, yeah, we are in seasonality. We are supposed to be bearish. We are supposed to price in that there's an election coming. We are supposed to take profit. We're supposed to go lower so that we can get into the better price when November comes around.
Yeah, I mean, I think I'm right there with you. I think if you take a look at this and you just say objectively, there's a lot of stuff that is uncertain. We don't know who the president's going to be, which could potentially, if Trump were to win, I don't know what happens with Jerome Powell. Does he keep his seat after his time ends? Which I would argue Jerome Powell's been doing a pretty good job. We'll see what happens there. At the same time, you have seasonal just selling that occurs. You also have some mixed data in the economy. There, it depends who you ask, but some economic data looks weak enough to threaten the idea of just how soft this landing is going to be. We've had some really weak jobs prints. We've had unemployment overall on the rise. But yeah, I mean, it's worth mentioning that there's enough in this market right now to just be cautious, just be on the sidelines. That's where I've been. You even have taken a short on the S&P, which is looking, a little bit better here this morning. I've shorted the Nikkei. The other way I'm trading it is I just have a lot
at
of
the bottom week.
Sorry,
you shorted a bottom week?
No, I shorted the Japanese currency. I'm sorry, not currency. Japanese.
But
stock
isn't
market.
that bottom of that green candle?
Yeah, I did a really good job at picking the low here to take a short at right here. No, I saw
That's
this
about better
rolling
than
over,
me.
put a stop loss above.
That's better than me, Nick. I would have sold probably that couple of candles later and a bit lower, and at the bottom. So you probably got a better entry than me.
You would have taken this short. That would have been a really nice. No, I saw this level. I had it marked up. I took a small sell. My idea was I was going to take a second attempt if we came up to this area. I trimmed my stop loss just a little bit. So we'll see. But just like the US stock market, if you do get some bearishness globally, it is likely that the Nikkei would also follow. And it's a pretty volatile index, especially in the last few weeks. I mean, with the big sell-off last month, so on and so forth. So we'll see. What else are you watching outside of indices and yen? Are you watching any dollar crosses?
I have to say, I'm very surprised today by the reaction. I also said, was it yesterday or the day before? Okay, someday, I said we're gonna go down to 110, and we kind of hit that now. So that's kind of like the completion of this week's move. So maybe that's why they fell, because in my mind we saw 2.5 today, which is we haven't had since 21, I think. So that's really good. But also you saw 0.3 month over month. So there's kind of conflicting information. So in my world, that would be a dollar bearish move. On the other side, so I was thinking of buying it. That's kind of why I said it. And then I saw the CME price, and then I forgot that we have to price out the 2 rate cuts. So that will be the dollar strength, because we have to reduce the short positions going into more bracing for only 1 rate cut in 7 days.
Yeah. And that's the thing, is when we look at the rate cuts going forward, I've been trying to figure this out myself, is like, how many rate cuts is good and how many rate cuts is bad? Like, if you get too many rate cuts, it does start to question, like, how strong is the economy? But it does seem like right now the market is kind of like still buying the rumor, but we've seen a pretty big give back here. Seems like market's just trading sideways, waiting for the delivery of that cut. Because I've been thinking about this too, Ivan, is like, with the Fed meeting next week, they're going to likely, you and I both discussed yesterday or Monday, we discussed the idea that, okay, it's probably going to be a 25 basis point cut, but there is that potential that the cut is a hawkish cut, basically a 25 basis point cut laced with, we are going to be very cautious from here because inflation, but we got the good inflation number. So I think it's likely that we see a 25 basis point cut mixed with a somewhat dovish, like, hey, we're stepping into the right direction here. So we'll see, but I am very curious to see how they deliver the cut when they do. You know what I mean? Like, it's probably going to be 25. I think that's where we're probably going to land, but how are they going to deliver it?
Now, I think that they have all the evidence to continue, because he was quite hawkish last time he spoke, was at Jackson Hole. It's quite bearish. So in my mind, they have all the reasons, all the ability, and all the willingness. The only question is, will they say that we are cutting today 25 basis points, and we will go data meeting by meeting, but we are not going to close the door for future rate cuts. I think that's going to be the discussion, because 2.5 inflation is very close to target.
Yeah.
And we have come from 9% or so. So, and also you have seen labor market weakening, as all the reasons, all the signs of a weakening economy is there. So the only question is how much, and they have to start move, because they are currently at 5.25, and they are now almost 3%, 2.75% of 2% and 75. Different from where this inflation is. So they are really far away from where inflation is. So they need to start move, and they can move quickly. And Do I believe we're going to do 5 rate cuts by the end of the year? Yeah, if this is the direction that CPI is taking. If we hit 2%, dollar bearish to the moon.
Yeah. Yeah. And that's going to be a very, very interesting next couple weeks to see where that goes. Also, just for pure drama and fun, I just put a poll in our Telegram channel. Who do you think won the presidential debate yesterday? You got 3 options: Harris, Trump, or I don't know. And don't feel obligated to vote. But if you're not in the Telegram already, you can join to vote inside of our Telegram. We put out daily analysis, commentary, all sorts of good stuff. So if you'd like to join, if you'd like to vote on this presidential debate thing, we can go from there. Again, vote within the Telegram. We'll drop the link to the Telegram in the chat right now, and I'm curious to see what you guys say. Yeah, market slightly lower here now. NASDAQ very modestly lower. Really the Dow Jones taking the biggest hit, down 1.25% here. The Russell also taking a 1% hit. Interesting to see Dow Jones as our biggest decliner of the 4 indices now. And I'd also like to just take a quick look at the heat map. We got Nvidia up and pretty much most other things down here for stocks. So that's giving you just a little bit of a pulse check this morning. Interesting though, I actually wouldn't have expected this, Ivan. I thought that the inflation figure was pretty good. 2.5%, as you just mentioned. We're close to target. That's also, though, again, don't mess with seasonality.
Yeah, or are we thinking of recession? Because this is a very, very thin sword we are balancing off now.
You know what tells me? You know what scares me about a recession, Ivan? Oil. Have you seen oil? Oh my gosh.
What do you mean? Like, isn't it better to have low pump price or something? Like, isn't that lovely to have $1 at 66? We can go back to where it was pre-COVID.
Yeah, I mean, it is, but my goodness, it does make me a little nervous. We take a look at the weekly chart. We are sitting near the lows, March 2023. We've erased all of the oil gains here this year. And, obviously, Ivan and I we're joking, like, who doesn't love when the gas pump is a little cheaper? The signal, though, that's a little bit concerning is, why is it so cheap? You got to start thinking beyond, like, okay, my gas price is low. And yes, Ivan just hinted, he gave the hint away. China's data came out really poor. We've got economies around the world showing signs of slowing. And again, this is part of the reason why I'm just cautious on indices right now. Yes, there's the chance that we do see a soft landing still. And I think that that's probably fair, but there's a rising risk that maybe the landing won't be perfectly soft. We're seeing oil. You have to ask the question, why is oil trading at $67? When the economy, if you're thinking the economy is going to be strong, oil should be holding up because people should be bidding it up. Transportation should be high, shipping and travel and everything should be booming. So you would think oil prices would stay strong. But that to me makes me a little nervous, Ivan. And I think that, yes, the inflation figure is down, but is inflation coming down at the peril of the global economy? That's the question.
Good question. Yeah, it does give us a bit of a bad backdrop. So I don't know how to read charts, but I think the same price we've had is back at 8th March 21.
Interesting.
So that's the price over there.
Yeah. Very, very interesting. You're right. March 2021 goes back to even same levels we were at 2018, 2019. Crazy. But yeah, I don't know. It's a tricky one for me because you've also got, it's almost like you said, it's like inflation's cooling off. Shouldn't we be cheering right now? And meanwhile, you've got oil taking out the lows and the stock market's down today. That to me signals that the market is sensing a possible recession. And again, I don't want to come out and say like, oh, I'm thinking there will be a recession. I'm just thinking that there's a rising risk of one, which is something that can move markets by itself.
Oh, the mind twist in that question.
Oh, no.
There is 2 sides to every coin. There is your truth, there's my truth, and probably somewhere in between there's a truth.
Yeah, right.
But another way of looking at this market is this is a bottom. Let's buy.
Actually, so Ivan, I say all of that where I say kind of the pessimistic, like, oh, oil is falling apart, and I'm not trying to be pessimistic. I actually, if I spoke with my actions, I sold a put on ExxonMobil, which is of course a company in the oil and gas space. So I actually think that oil prices are not going to stay at these levels for forever, and I've started to sell puts on companies in the oil and gas space. So I'm kind of buying the dip on the longer term, but in the short term, I think that it does signal some concerning stuff for, for global markets and for uncertainty out there. So, at the same time, though, gold is down 0.5% here today, which is kind of a confusing one to me. I would have actually thought gold might have taken a stab at taking out the all-time highs, but not quite.
What does it need, do you think, to breach 20? Is it 25? 2,500 and something?
I think you needed to see the 50 basis point cut. If you were going to see an explosion up to, 2,600, if you were going to see that move take place, I think you needed the 50 basis point cut in September narrative to become stronger. And I think we missed that opportunity with the jobs data being mixed and CPI being cool. It's not like enough to decisively say, oh, the Fed is going to cut 50 basis points. And that's what I think you needed to get the big move happening on gold. Would you agree, or is there anything I'm missing?
Nah, also what I think is this is just a bit what do you call it in English? Delayed gratitude, not delayed returns. Meaning, I think that we're gonna need FOMC, because in my world, in my market world, there's a lot of people who does by fact. So some pension funds go by fact. When we actually are going to start rate cutting, actually going to actually do change monetary policy change, that's when they will act. Many people has already done.
Yeah, no, I was just going to say, I think you're right. I think that in the event that the action starts taking place, like they actually begin cutting rates, I think that will be a good environment for gold to continue its rally. Now, that's probably why gold is already up 20+% this year, is the market's like, oh, that environment is coming. But I do actually agree with you that once that environment begins, it can continue to give gold a nice boost. And at any point in the rate cut cycle, we have to think ahead on this, Ivan. Like right now, we've been discussing, oh, rate cuts are coming. When are they happening? But let's think ahead to a couple months when they have started to cut rates. Our question will be, are they going to accelerate rate cuts from here, or are they going to go slow from here? And if you get at any point an uptick in fear about where the global economy is at, it is possible that gold in that rate cut environment, if they start speeding up the rate cuts, gold probably takes off with that. So, I still like the upside to gold going into 2025. I stay bullish on it. I think that the only scenario in which I really get bearish on gold is if the rate cut story falls apart, the economies of the world like reaccelerate heavily, and there's just not that big backdrop anymore.
Yeah, of course I forgot where that one went. But I was trying to find, I said it the other day because I need to do head math, that we have priced in how many rate cuts by 1 year now. So September, so 22, 3, 4, 5, 6 rate cuts by end of year. Sorry, by in 12 months time. So if they start rate cutting, maybe 2 rate cuts in either November, December, I think this going to accelerate that they're going to price in even more rate cuts in next year, of course, supported by CPI. So I think that once the snowball starts a bit, I think it's going to take a bit off. The only problem, and we're always going to say this, Nick, but by the end of the day, if this rate cut starts to kick in, when is CPI going to pick up again? Because that's the goal, or try to not make that fall too much. But one rate cut now is going to be looked at or seen in like May next year or so.
No, that's actually such a good point, Ivan, because if you think about like, okay, rate cuts start, where does inflation start to pick up? We actually want to see inflation start to bottom out. Like if we're trying to really look ahead to our own commentary a year from now, we're going to be questioning, okay, if inflation keeps coming down, we
What were we
want to
thinking?
actually see inflation start to bottom, right?
Yeah.
Yeah. So we don't want to see inflation crash through 2%, which
Yeah.
would indicate recession hardcore. We want to see inflation do a little bit of a landing itself and stay okay. So I do think that, you know, the stock market's reaction here is, I think we're entering into the next phase of this story of the fundamentals, which is, okay, rate cuts are now starting. Where do we want to see the data fall after those cuts begin?
Can you pull up the US CPI? Because yeah, that was obviously I was about to, like, that doesn't really dollar, but it's been so resilient to fall. Like, what is in Europe now? Europe is 2.2 now or something like that. UK is somewhere in the region of that about as well. But then if you add, 2.2. So because if you see compared to euro or pound, dollar has risen a bit, fallen a bit, now falling a bit again, but those are the economies that has responded more or better to the rate hikes or changes in restrictive territory. So my honest fear is that once inflation now starts interest rates start cutting, money gets cheaper, this inflation is going to quickly go back up again because it's been so difficult to get it down.
Yeah, it's been so difficult.
And actually,
that difficulty has been the resilience of the U.S. economy. So I do think that also stacks in, you know, with this 25 basis point cut. Why I've never really been in the 50 basis point cut is because look at the U.S. economy's track record. It keeps outperforming expectations. And so the Fed, I think, is going to be a little bit cautious to cut 50 because of exactly what you just said. They don't want to see, okay, if you cut 50 basis points and the economy just booms from there, you're going to have the inflation story come right back. So I think that the process of cutting rates very gradually and slowly could kind of thread the needle of getting inflation to stay low, but also the economy to not fall apart. So we will have to see. But Ivan, this was one of our better conversations, I gotta say. I feel like we've come a long way as analysts and traders and commenters on YouTube. So I want to just give you a bit of a shout out. Everybody who's watching right now, if you guys would like to get more commentary from Ivan, very smart guy, got some great commentary both on the fundamentals, technicals, risk management, psychology, all that stuff. If you'd like to learn more from Ivan, we'll be dropping the link in the live stream chat or on Twitter or wherever you're watching to follow Ivan on his YouTube channel. It is right there. Click that link. Make sure to go subscribe. And you can also contact him using that link on his YouTube channel. You can find his Discord and all that good stuff. Send him a direct message. Ask him about his coaching service. He does offer one-on-one coaching if that's something that you're interested in or would benefit from. He's got some really, really great affordable prices, and his commentary has helped a lot of traders in our Discord group. If you're in our Discord, by the way, you can also find him in there. He's in there sharing his trades, etc. So, Ivan, thank you for coming on. Great stuff.
Thank you for having me.
All right. See you, Yen Man. Have a good one. All right, guys. There goes Yen Man. Why do they call him Yen Man? Well, because every time he comes on the live stream, he says, hey, guys, today we're going to talk about the yen. And then we talk about the yen. So that's why we call him Yen Man. I didn't even give him that nickname. He gave it to himself. That's how you know the man likes to trade the yen, which is totally valid. Everybody's got their thing that they want to trade. I like to trade, the NASDAQ. I like to trade indices and S&P and gold. So maybe you could just call me Gold Man. I don't know. That's kind of cheesy. Yen Man's cooler. Anyways, S&P 500 is now down 1.15%. And I'm not going to lie, kind of a weird move. Though I think that if you actually just kind of zoom out and you just say, where are we on the daily chart? We haven't moved that much, right? Okay, we bounced. We've just come back. We haven't made a decisive move. If you see the S&P 500 break through the lows today, though, you've got a different story on your hands. Then you've got a little bit of fear. And I just think that I might feel very dumb in a few weeks from now for being in this position, but I have really taken a lot of positions off. I stopped out of my S&P 500 longs right there in the yellow line I just drew. I stopped out. And it makes me nervous to get out of the uptrend in a bull market. But the fundamentals and the EdgeFinder have kind of hinted at with the data points I was looking at. They're telling me, okay, cautious. And I decided I'm just going to basically take profits on moves. So I stopped out of my longs, and it has been the smart move, has been to take profits and get out of the way. But it makes me nervous when the market starts bouncing, because I'm like, okay, have I made a mistake here? Is CPI cooling off? Are we going to get the cuts? Are we going to get the soft landing? But the reason that I got cautious in the first place is because the labor data has been really spooking the market. Then you also had China data came out really weak. Then you have oil falling through the floor, guys. I can't downplay this enough. Obviously, we all like it when the pump is cheaper. I love it when the pump is cheaper. I don't know if you guys like it. You go to the thing and it's like, for me, it's the difference of paying $65 or $50, 55, whatever it is. And it's like, okay, I can save that money, go get a free drink in the store, basically, from my saved cost or whatever, even though it's not really saved cost. It's nice when the pump is cheaper. It does help the consumer. It helps all of us keep a little extra money in our pocket, which is good for the economy. But you have to ask the question, why is oil down? Is it because the world is now a peaceful place and there's no fear? So that's why people aren't, remember, oil goes up during like war times and stuff like that because of its, supply constraints, etc. I don't think it's that, because we still have ongoing conflicts in Eastern Europe, in the Levant, right? We have conflicts that are ongoing. Meanwhile, oil is trending lower. We had weak China data that caused another sell-off. We had, slow jobs data in the US. That's been trending this thing down. So hear me out, because Ivan and I were discussing this a moment ago. I am short-term still thinking oil has room to go lower, but on a very long-term basis, I've been selling puts on some stocks that I like in the oil and gas sector. So I actually think you're probably getting, on a longer-term basis, like go out to the weekly, go out to the monthly, I think you probably are getting a decent discount here on oil in the long run. I could be dead wrong about that. We could see oil go down another 20, 30%. Don't get me wrong. We could be at 50, which would signal major recession concerns. But even at 67, 66, I'm a little bit cautious in this market. You've got the S&P 500 down on what arguably should have been good CPI news. Is this recession concerns? So just something to think about. You got to stay vigilant in this market, because again, we are, continuing this uproar in the S&P 500. However, today's day, erasing this little bounce here, we could see a takeout of the lows and continuation of this sell-off. So I'm just being cautious. So I'm stayed cash. I also shorted the Nikkei, which is actually going pretty well. I'll pull up my EWJ position. We're up $677 on a day that the market's down. I will take that all day long. So it's a small position for the account, but $690 or whatever of profit, I'll take that. I also, just to get fancy on it, probably too fancy, probably stubbed my toe with this idea, I actually also sold a put at 67, which means I capped my downside potential on this one, but I sold it going into CPI. So shoulda, coulda, woulda not done that, because 67 means I cap my upside to right here, but I collect a premium. 67's right here. So I cap my max profit to this point here, basically, minus my my premium collected. So let's call it, I think I got 60 cents of premium on that. So, 66.40 is my max profit. At that point, I would, not be able to. But that goes out to September 20th. So I got like 9 more days on it. So we'll see. But anyways, guys, we're gonna bring into the conversation the man, the myth, the legend. We'll be talking to Chris Pulver here in just a moment. Before we do that, let me just mention that you're going to see in just a second a promo for the new Pulver Alert service where you can actually get the trades that Chris is taking shared directly to your phone or your desktop. You can also sign up for our VIP group. So we have 2 different services here. You can take your pick. If you'd like to get access to the A1 Trading VIP server and get access to our Discord trade alerts, you can do that by sending us a direct message. We'll drop the link here now in the chat to speak directly with a member of our team about the different options that we have. If you're already a member with us in Discord and you'd like to get access to the Pulver alerts, here's how you can get access. Send us a direct message. Someone from our team will help hook you up with that new Pulver Alert service. We've got a lot of people who have already joined his service, which is really exciting. And we've just launched that. It's our first kind of new addition to the Discord in a while. So we're really, really thrilled to get that set up and trade alongside the man, the myth, the legend, Chris Pulver. So stay tuned. We'll be right back with Chris.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. What's
Chris,
happening?
Sorry, I'm here.
Hey, Nick.
I just want to say hey to you for a second.
Sure
Hey,
did. Wild start to the day, huh? I'm looking at a 5-minute chart.
Yeah.
This is nuts, dude. We've literally started 96 all the way down to 21, like 70 points straight red on the 5-minute chart. Pretty impressive for a CPI reaction, huh?
There's a lot to unpack there. Yes, I think it's very interesting because should have been a good number, right? 2.5. That's not bad. 2.5%. We're getting real close to targets here. But I think I've been trying to unpack this in the stream here today.
Yeah.
I think what might be concerning the markets too is that, okay, you've got oil slippery slope falling down. You've got the labor market data, which has not been super impressive. I think there's a potential here, Chris, that we may be seeing this weak CPI print spooking investors a little bit. Why did the forecast slip down to 2.5? Yes, it's good news, but remember that inflation can cool off dramatically if the consumer is cooling off dramatically, if prices are not rising because people aren't spending as much money. I don't know. There's something's not right here because again, a couple months ago, a CPI print miss or down to 2.5% would have gotten this thing kicking to the upside.
Yeah, it was Frank actually pointed out. I saw that yesterday. Was like, hey, it just printed 2.5 for the forecast. I'm like, that's crazy to do that yesterday.
Yeah.
Did you also notice the CME watch tool? So I was in a session right before this, and I'm sitting here like, look, we have some structure. If we have, clearly the market was directional. I ended up putting in a center trade right in here that I ended up bailing and taking the loss. But this is also the difference between today's open. By the way, this was yesterday's open. That was easy pickings for profit. This was Friday's open. That was easy profit. Thursday, easy profit. And then today, not even close to the same. So it's just like the market's like, no, we're going to go crazy on the day. So what I ended up doing, I shared this trade with Frank yesterday. I have a dual butterfly spread, and I posted this in the alert section for A1 Trading. So I did share this trade. In fact, in my section here, let me go into, where to go? Discord. There we go. And I'll go into my section. I believe I put it in as a futures trade. Where's my section here?
Scroll down a little bit.
There we go.
There you go.
Okay. This is the trade that I'm in. This could be my saving grace for a potential payout today. So I basically put on 2 butterfly spreads. I share the image down here with what the trade looks like. The expiration is today. And so if price is in either one of these profit traps, then there's potentially to pay, 10 to 1, which the total debit was about $6. and this would be about a $30 credit max profit. So I mean, I can certainly make up for the net debit and have one trade pay, but here's the live look at that trade. Let's go to Thinkorswim. Here's the live look at the trade. So if price continues to push lower, right now the shaded zone you see in gray, this is now the expected move of the S&P or the ES feed.
Mhm.
So if price does get into that expected move, I mean, anything in this profit trap, this 545 credit, this is now trade. This is a debit in real time, but that's if you took the trade now. I'm going to look and see what it's trading for as an overall credit, because ideally what I want to see is, okay, I know that I paid $6 for both of them. So this is $3 here and $3 here. I'm scribbling like crazy, but $3 here and here. If I see this trading at, let's say, I don't know, I mean, like $15 is pretty good. $20 is pretty good. I might end up managing some profit if it comes into that peak today. So even though I took a small loss on a strangle trade, I might have this as enough volatility to get me something that's good, something that's very profitable, and it's a low risk, high reward strategy, and that's what I'm monitoring. So right now, my overall positions, P&L, pretty manageable. I don't know what your drawdown situation looks like with a down day, Nick, but I'm only upside down like $5,000. No, it's not a big deal.
Because I'm super cash heavy.
Are you? Okay. Well, and that happened like last week, right? Like that first week kind of stopped out a lot of positions. Yeah.
Yep.
Good.
Which has been the right play. It's been, kind of actually the right play on like where I was heavily exposed, which was SMH. I stopped out on that one, which saved me probably a big slide of like 6% on that position, at least on the allocated money there. But yeah, no, I'm looking at it and I'm thinking, I just think that with the September seasonality, with the election, with the labor data cool, I'm just cautious. I'm not outright bearish. I think that, rate cuts will be good for the economy, will help things out. But I'm seeing some warning signals. One of the big warning signals I keep coming back to is that slide in oil makes me a little bit nervous about where we're at globally. That's telling us something, because as you were joining here today, Chris, it was like, okay, oil's down dramatically, but it's not like we had some big peaceful resolution in the Middle East or peaceful resolution in the Ukraine. So the supply side's not changed all that much. It seems to be slowing demand. And also OPEC themselves actually cited slowing demand for oil. So you're getting all these signals that, okay, demand for oil is wavering. You have to ask why. And oil holds the key to the castle so frequently in the markets when it comes to, the global economy. Like oil is almost a good signal of where it's at. You just have to kind of filter out some of the wars and supply issues that can muddle that,
Just ignore all that stuff going on.
No, right. No, that's not what, you know what I mean? Like just the demand for oil, just the demand side of oil is very important. The supply side can be impacted by wars. And obviously we want peace in the Middle East always. Like that's a terrible, sad situation. But from specifically the market's perspective, it's like demand for oil or the lack of demand for oil can give you a good read on kind of global economic health. So just something to keep an eye on. I do still have, like I said to you the other day, this short position on the Nikkei, which has been in and out of profit, not gone too far anywhere. I'd like to see if we can take out those lows. I could start trailing a stop on this one, but just trying to stay mostly cash heavy, see if we can get a bigger rip to the downside, in which case I would look to slowly start picking up and deploying stuff. I sold some puts on some stuff. Here's where I'm currently selling puts. So I sold puts on NVIDIA at that 95 price that we've discussed the other day. I sold a put on Google. I sold a put on Exxon. So got some puts floating out there that I've sold, and still long gold, still short EWJ, which is the Japanese stock market, and sitting on a whole lot of cash in the meantime, just kind of waiting to see what happens.
I like it. I mean, I see. So this is a currency strength chart, the Japanese yen. I had a chart alarm go off overnight with the Japanese yen future, so we did poke those recent highs. That's a crazy amount of volatility yet again on the yen. Up to the top of the food chain, all the way back down to baseline, all the way back up again as the market opened up. It was an interesting reaction to CPI. Like you said, I mean, initially I was watching the futures market. This was the CPI print right here. So CPI market reacts down, comes right back to the weekly VWAP, pushes up here, and then just freaking dumps. So there's clearly some manipulation going on. I mean, look at this. This is the ES. I think this is the ES feeder. Is this the? I think this is the NQ over here. This is the NQ. Okay, so this is NASDAQ. If you look at this chart here, Nick, you would say it's pretty simple that we're in a downtrend, at least for right now. Like there's all this level. We're making lower highs and lower lows. And so even today, you know, right into this cluster of support, and price just reacted from it. So, you know, we look at the NASDAQ heading lower. Your puts that you have, those are looking good. I bought the MNQ at 18,000. So if we start to see, you know, IV swell a little bit of risk off trading, you know, Frank might get his volatility play that he's after. I know he's long the VIX, so that's got to be elevated a little bit today. It's back up into the 20s, so we're up 11% of the VIX today.
Did he tell you about his SPX 500 yesterday?
4 points, right? He was just by his chinny chin, right? 4
I
points.
was watching him right at the close. He was watching it to see if he was gonna get max profit or not. But yeah, it should be interesting. Also, I think he may join you in just a few minutes. I got to hop off, Chris. I got a podcast. I'm late too, so
okay.
I will catch you up on the next one. Guys, just a reminder, if you'd like to get access to Chris or my signals, all the information can be found chatting with directly with one of our members of our staff who can set you up with a membership. If you'd like information about our signals, please send us a direct message here. You can get access to Chris or myself. Just chat with us and someone from our team will help you out. All right, Chris, you got the show for a little bit.
All right. Thanks, Nick.
All right. See you, man.
Cool. All right. So pretty wild day to the downside. I did have some gaps to show. Let me go back to this software here. To the downside, SPX is filling in, looking like we're going to fall towards 5,400. That is the close from the 6th, which would have been Friday last week. So we had Tuesday directional day last week, Wednesday, Thursday indecision. Friday was a down day. It was choppy, but still like a down day. Finished around 5,400 on SPX. That is actually the gap that we had a Monday open. So this, oops, I'm using the wrong color. Let's go. So that low looks like we're going to get tested. This gap has completely filled from this route today on CPI. Now, obviously, the market, if we start to break those lows, then we are more vulnerable to the downside, which I don't think should really surprise anybody. What did I talk about yesterday? What did we talk about yesterday? Let me get into, there's one workspace that I want to show you. This is the same workspace, so I can switch this one out. So there. Oops. Yeah, so I've got my live data feed for futures. We are just falling off a cliff. S&P down. I want to show you that really simple. Get out of here, bro. Where's it at? My Simtech. This one with the 200 EMA. This is what we talked about yesterday. Okay. Now, if it finds the 200 EMA, this is on the S&P 500. This is a SPY. If we find the 200 EMA, or I'll just say this, even if we break, right? Even if we break the lows, it just makes it easier for price just to be the path of least resistance right now is to the downside. So if this is there to there, I mean, there's all sorts of ways I kind of splice this up, but if it's connecting the lows and the highs, okay, or it's something like this, I'm just looking to see, I expect price on the S&P at 200 plus bars on the daily overstretched. I think it is easier for price to find the 200 exponential moving average. Okay. So that means that right now in the short term, I would be bearish. I would be looking to stay bearish. So, I mean, if Frank's had the right idea with some bear call spreads, I've got some hedges in, I've got some long puts going. I have some broken wings, and all my broken wing butterflies are up here to the upside, right? So those are some profits. As long as price goes lower, those all get paid pretty nicely. Bear call spreads get paid pretty nicely. You know, did everyone see what happened in JP Morgan yesterday? Their guidance moving forward was a little bit off, saying they were too optimistic on some of their earnings expectations. And so JPM, which was one of the best financial performers this year, was down like 7.5% yesterday. So, yeah, I mean, everything's looking pretty darn bearish right now. And that's quite the drop. I mean, point wise, from high to low, we're talking about a move, about a 1.65% move. That's big, right? I mean, usually this market lives within a, half a 1% move, and we are seeing some heavy pressure to the downside. So, it is what it is. Like, I think this is fine. I'm looking at my, my overall P&L. I'm getting some drawdown today. That's okay, but I have some hedges in here that I want to keep an eye on. So my ES, what do we have here? Oh yeah, so one of these is getting in the money. Let me check that trade here. Okay, all right, we're cooking with gas now with this little butterfly spread. So if we have a horrendous day to the downside, let me check the points right here. This would be right around 53.95 was my pin price. So if we hit 5,400, I would obviously like to see price kind of linger around here. I'm going to do my best to manage some net profit. If I can walk away with like $10 to $15 net profit today, I'm going to be pretty stoked about that kind of double butterfly spread. So I'll be monitoring this. This is pretty much going to be my intraday task for the day, is just monitor this. I have until 5 p.m. Eastern time when the futures market closes. But anything at like 2, 3 o'clock in the afternoon, if it's down into this this low point, this is good. What I'm trying to avoid is hey Frank, I'm just finishing up my little butterfly trade here. What I'm trying to avoid is if price goes so far down that it actually gets through my profit trap. So if price goes far enough that it's then on the other side of my profit trap, I'm trying to make sure that I'm at least protecting a majority of the profit when and if I can. So realistically, right now this is added up to about $7, and I paid $6. So I cover the cost of my trades, but obviously I'm not happy with that profit. So what I'm going to look for is see if price wants to go lower. If this is trading in the double digits where I'm getting, I'm hoping like $16 or more would give me, that would be a $10 credit total, $10 credit. And this is at a 5 multiple. So it'd be, let's see, a $10 credit. I'd be up $500. It's a 50 multiple on the ES feed. It'd be 5 on the micro. So I'd make $500 if I get into my profit trap today, and this can show like $16 credit or better. So, all right, Frank, what's up, dude? How's your VIX? How's your VIX doing? How's your bear? You got another bear call spread in today? You want to trade? What are you doing?
So the VIX is up pretty nicely. It's at $3.06. I got it for $2.50.
Okay.
So nothing crazy. It's like 22% up on the trade. I took a bear call spread on the S&P again at 55.15 this morning. So that was the threshold. I got it for $1. Unfortunately, though, I took a bull put spread. At 54.30 was the threshold as well. But it blew way past that in the past like 15 minutes of trading. So right now, one is near full profit. The other one's at a pretty steep loss today. But I wasn't expecting a big reaction. I was kind of expecting a muted one. I don't necessarily think we're gonna have like a super hard sell-off today. I would love one because I have like a lot of big I have the VIX plays, and then I have out of the money puts. So that would be nice, but I don't necessarily think that it's gonna sell off as hard as we think. And even today, if you go out, you look at the S&P on the daily chart. So we're down 1.4%.
Yep.
I mean, this isn't saying much. I don't know. We haven't broken the lows of
Friday. It was Friday's low.
Yeah, Friday's lows.
Yep.
What we could do here is just create like another bottom. We could create some sort of higher low, and maybe it'll turn to some kind of wedge pattern.
We could do this again. I mean, if it's going to be weird, we could create like maybe Friday's candle could be like another box if price gets like a little testy in here. But if we break through the lows, I mean, okay, fine. I don't know. I mean, again, is like, does it fall through the lows and then just dump to the downside? Probably not. If we just fall here, retest, or fall here sideways, and there's just pressure. I mean, look, I keep going back to that 200 EMA. It's down there near the August 5th lows. I don't know if the market's going to use it as a level, right? Like use it as a level just to jump up and be like, I mean, to me, it's a buy zone. I think that's probably my next obvious buy level is if we find this 200 EMA, I'm going to put in some bull put spreads. So are you doing more bull put spreads like aggressive based on this current position?
This was the first one I've done.
First one, okay.
I'm already regretting it, but I think I was saying yesterday I'm limited on the upside in my opinion. I think if we go higher, it's not necessarily going to rip higher.
Agreed.
So that's like what I was thinking. I'll just sell calls or sell spreads at those highs or a little above.
Yep.
And likely price won't break that level. And so for the third day in a row, it's been correct. But I was also thinking that, yesterday came so close and I thought I was so in the clear that maybe I should, protect myself a little bit. So I went pretty far below yesterday's low, and that ended up breaking. So
what's your line in the sand then? What's the bull put spread line in the sand?
54.30.
So it's below that now?
It's at 54.13.
Yeah, I know. I'm saying so you're below your price now, right? 54.30 is your sell put?
Yeah, I'm like 15 points below it.
Okay. Well, that's not good. Yeah, that's not good. You're 5 points wide, I'm assuming, right?
Yeah.
Okay.
So it would be a $4.90 loss.
Oh, okay. Yeah, I mean, I just look at this. This is a very decisive move. I mean, this is still the 15-minute time frame. We're an hour and 12 minutes into opening bell. This market is just pure downside. Now, again, doesn't mean that it's like it's obviously a nasty day today. Like there's no getting around that. This high to low at 1.6% high to low. That's a big drop. Okay. However, this support from Friday is still there. So I'd say there's a chance that the market maybe doesn't make any major damage play to the downside. But if we do, I mean, I think the easiest play here is, I'm going to stay away from like the catching the falling knife situation just in case this does breach the floor. But what I would say is if we do break these lows, then this fade. I will probably be intraday short on option or on the futures market, looking to try to stay with this overall move until we start to see those bigger time frames hit those the EMA, the 200 EMA.
Yeah, I think if we wait if by midday price comes back up, like say third of the way or so, I might just sacrifice that day trade and just close out for small loss, break even or whatever.
All right, I'm gonna set a chart alarm at 50. This is SPX. Let me go SPX. I'm gonna set a chart alarm at 53.95 because that is my pin price on my ES trade. So 53.95 there, and then on ES 53.95. And I will check and see what it's trading for. So if that activates that alert, I'm coming right into Thinkorswim, and I'm going to look and see what this credit situation is trading for right now. So on the put butterfly, this one's pretty much worthless, right? Or I'm sorry, the call fly is pretty much worthless because price is, likely never coming up here. This is the expected move now based on the current range, which when I started trading this morning, it was expected to be like a 38-point move. It's probably doubled that. What's our move on the day thus far? For the day, we have a high at 55.07. This is ES feed. 55.07 to the low at 14 or 15.
Like something points.
Yeah, we're like 85 to 90 points on the day. So this market is determined, dude. So anyway, I like this trade. I think that if we break the lows, I want to see this, Frank. If we bounce, like you said, if that allows you to get out of your trade, right? Like I do see some good structure here. These gamma levels or maybe stopping, kind of containing price around at 5,400. But if we blow through those levels, then any type of rip we see, I'm just going to look at, pullback to fade. And obviously I just want to keep like broken wings. I might even do this. I might do a broken wing butterfly up here and just say that we're likely not going to take out that high. So I'll play around with some of those kind of income plays. I might do an SPX and NDX trade for that, or I'll get into the futures market and I will grind a little bit lower intraday.
Yeah.
So, but yeah, we're stalling right around that Friday low for right now. But there's still a lot of trading left in the day. You know, where it's not even 11 a.m. So a lot of trading left in the day. But yeah, let's see if we breach that 5,400 zone. That's a big one, man. And if we do, well, my current value is around let's go SPX. My current value is around 51.76. We've got the August low at 51.22. I don't know. I don't think it's that hard though. I mean, I think right now, if we're trying to like aggressively trade and stuff like that, that's fine. But I think the easiest trade is if you want to establish some clean direction, that we just look to buy in here in the short term. And that's kind of the line in the sand I think the market would like broadly respond to. If I think so, but define risk trade in my opinion.
It's hard to tell because, I mean, what do you think caused this sell-off? Like the inflation?
No, I think this. I don't. Do you think this has anything? Do you think price action today has anything to do with inflation? Because I don't. Yeah. I don't.
I do think so. I think. I'm just confused as to why. Well, because after the report,
yeah,
we kind of had a sell-off, but it was more so like a muted sell-off. It didn't really move. And then all of a sudden it picks up towards the end of the hour.
This is the feed right after the news. So we dropped lower initially. That was the initial reaction. So we dropped lower, ripped up here, and then we've been fading all morning. So we dropped, ripped up here, faded all morning. I think that the direction itself is not necessarily CPI influence. I think CPI just gave the market a false sense of hope, but the reality is we're still, putting in the reality of like last week. Last week employment news was bad. I mean, like financials. I mean, a lot of the banks were going back. I think that the Federal Reserve or like the big bank, I think they cut their asset requirements from like 19% to 9%. So that should actually mean like more money and more reserves for banks to do what they want. But that was like it was a negative reaction or adverse reaction. Like JPM dropped like 7.5% yesterday, which was keeping pace with the S&P. It was up like 33% this year, and it's fading a little bit off those highs. I mean, we're still pushing down today, man. So I just think right now it's an aggressive way to have like path of least resistance, September effect, you name it. And I just think we're overstretched. I mean, I'm not trying to make this whole narrative really complicated. Once we came down towards the 200 EMA but didn't hit it, we're still pretty stretched where I've got a lot of history that shows anything over 200 bars, it's easier to find that as balance. So I'm looking to be short right now, at least in the near term, or just protective.
I am too. I guess I misjudged how heavy this move could have been today.
Sure.
But
it uses the news as an excuse though, Frank, right? Like a day like today when it's like it's just one news event, but look at what it does for like the broader flow of liquidity. It uses it as an excuse to just like pump the markets full of something. And that something today is bearish price action. So we have a lot of those where it's like, last week it was all employment news and we had a Tuesday, Friday. That was a pretty aggressive directional move considering Monday was a holiday. It's like the market came out swinging for September. And then like yesterday was really quiet. Okay. Tuesday was really quiet. And then today, not so quiet. It was just a news event was enough to kind of galvanize the direction. So I don't know, but it's not really changing anything from the pace that was set last week. Last week started with a bearish tone. This week is just more the order flow is kind of proving the same thing.
Yeah, but still at the same time, this isn't a scary drop in my opinion. We haven't really moved that hard. Like this can easily get taken out and come all the way back by the end of the day. Even though I don't think that will happen. Yeah. I mean, I've been surprised before by how the market reacts.
Sure.
So I mean, unless we get if we get above a 4% drop in a day, I think I'm going to be more worried.
I mean, I would too, because we're talking about the stability of like, we haven't seen many anything outside of like 2% intraday.
Talking about the NAS though.
I know. I mean, I get it, but that's if we had a 4% on the NASDAQ, you're going to have 2.5, maybe 3% on the SPY or on the S&P. I mean, look, the Russell is hanging in there 1.86 to the downside. Qs are 1.5. S&P's down 1.6. Dow's right there 1.69. Like everything's pretty much correlated down. Nothing's really worse. But it's interesting that the S&P is worse than the NASDAQ right now. And the Dow is actually worse than the S&P as well, slightly. So yeah, we'll see, man. I mean, this is a good way to watch price today. We're right back down to Friday's low. So if there's a bounce, now's the time. If there's not, then this could get a little bit uglier on the day, and we could have a 2+% day to the downside is going to do some damage because it's going to take out Friday's low. So
Yeah.
Yeah, I mean, look at the Dow. We're at fresh low. So Friday's low on the Dow got taken out. Friday's low on the IWM or the Russell got taken out. Friday's low on the NASDAQ did not get taken out. So, I mean, one thing that could happen today, NASDAQ keeps coming lower, tests the lows, and the SPY takes out the lows. Maybe the NAS takes out the lows. So there's a couple levels I'm watching, but what's that?
Need the VIX to keep climbing.
I know you do. What? So, by the way, what your VIX is what again? You have like the 17 something call, or did you buying out of the money?
I got a $17 call expiring October 2nd.
Okay.
And
I mean, you should close. You'll be able to close if we get a big rip in VIX. You'll be closing it out, in the near term. But yeah, $17 call. That was that the 233 or something. 230 debit.
It's 250.
250. Okay. So is it showing break even right now? What's it trading for? Because the bad thing about the VIX is it's not intrinsic value.
It's trading it's 28% up on the trade.
Okay.
So I got it at 250. It's at $3.22 now.
Okay, good. Cool. Well, I hope that, I hope that we're actually, I'm just going to set a chart alarm here at the highs. I mean, for your sake, it's going to make trading a little bit interesting if we hit 24 again on the VIX, but that'll be good for your trade. So I do like that.
Yeah.
All right. This is a wild day, dude. I mean, 1, 2, 3, 4, 5, 6 15-minute candles in a row. That is straight. So 15 times 6. We had 90 minutes of straight selling today. If I go to the 5-minute chart, which I was watching this morning, oh my gosh, this 5-minute chart, look at this thing. We had like 3 little breathers here, but this thing is just pressure to the downside like crazy. Let's see if I'm going to put a SPY level on here.
I have this weird feeling that it's just going to come back.
Yeah, well, don't trade feelings, dude. It wouldn't surprise me if it does, but I don't know, man. I mean, this seems like a lot of pressure to the downside just to be like, yeah, we're just going to rip right back. But it could, and to that point.
What was the 6th? Was that Friday?
Yes, Friday the 6th.
When NFP came out, we dropped harder in one 4-hour candle and then came all the way back. So
SPX, are you looking at SPX?
Yeah.
So the 6th was, so non-farm was not the 6th, or was it? Non-farm was last Friday, right?
Right.
Okay, so non-farm, that's 11. Non-farm was right in here. So this would have been, so I'm looking at the SPX 15-minute time frame. There's your, oh fudge, I need to go to a futures feed, I guess. Where's non-farm from Friday? Over here. So here's your non-farm candle. So we had this big non-farm news. I mean, it's interesting. Look at non-farm, kind of did the same thing. We had this initial jump on the ES feed. This is non-farm last week. We jumped up, pushed up, but we faded off of that for the rest of the day. That's kind of crazy. And then I don't know, the same thing kind of today. It's like we reacted initially at the 8:30 news, and then we faded up just above that, and then it's been tanking ever since. So I mean, this tone, and what we had on Monday, like those tones seem to be what the market's doing right now. So here's what I'm going to say, man. I don't like trading, emotion or feelings. Like you can have a hunch, but part of me is like, so what are you going to do with that? Because like right now, I don't feel great about like putting in a bull put spread down here. You're already upside down in a bull put spread. I don't know if the IV is climbed enough to maybe put a bear call spread or even a butterfly. I'm gonna see what this looks like on the NASDAQ. So if I did this above today's high, I doubt this is worth anything today, but 18,887. Let me check something here.
It's probably not.
It's probably not worth anything. 18,887. 18,887.
The trade that I had in this morning is now worth 5 cents.
So I could get $3 credit if I want to tie up $330,000 of buying power. So that I got that going for me. If I did, let's go 25 points wide, I can still get 73 cents tying I can make some income today, man. I'm pretty confident we're not getting back to that high. If I go 25 points wide, that's fair. What is that? Hang on a second. What was that? 70 cents, 70 to 90. So that's more. Okay, so I can make about $1 today. That's a 96% probability right now. I'm going to take this trade, 18,887. I mean, obviously, I could regret the heck out of this. Okay, that's a stupid trade. That's a stupid trade. If I am wrong, if somehow, this thing rips back up in a big way, like I'm going to risk a crap ton of money just to make, 90 cents or $1. So here's what I'm going to try to do. I don't know if this will work, but I'm going to try to put in a call butterfly and 887. Let's move this down. So 887, that'd be my pin price. That'd be my strike. Dadgummit. So I could take that trade for 30 cents income, have a profit trap in case we hit 887. That'd be all the way up here. Actually, 880. 880, 875. Skip. So that's not too bad. I could tighten this up. I could still make maybe 35 to 40 cents today, which I know isn't a lot, but I think that's a pretty safe income play and still have a profit trap on this. This is NDX. That's not bad. Make 68 cents. That's risking a lot more. You go a little bit wider here. So that's 15 and let's go 30.
Is this above price?
Above price. I'm going to do a broken wing butterfly with calls, and I'm going to try to get 30 cents on this. Yeah, let me see if I can take this trade. I'm going to go.
You were the one telling me fighting for 30 cents in a trade is.
But it's a profit trap, bro. It's not a credit spread. If price comes all the way back up here, Frank, I'm giving myself a chance to make $1,500 right there at the highs. I take that versus a credit spread.
But how far apart are these?
I'm only risking I'm risking $1,400. Look, the trade is not because I'm making 30 cents credit. The trade is because I'm giving myself a profit trap to make over $1,000. That's my trade. So I'm taking it, dude. I'm gonna try to get 35 cents right now. Let's go. All right, give me 30 cents, please.
I don't know. That's pretty hypocritical of you.
Oh, is it really? Listen to this guy.
Fighting for 30 cents here.
It's not about the 30 cents though. It's about the profit trap with the broken wing butterfly that gives me a chance to make $1,500. Do you see price finding a way to blow through today's high? I don't.
No, but
that's why I'm taking the trade. So it's not getting me filled at 30 cents.
Essentially, you are just going for that 30 cents then.
Your mom's going for 30 cents.
Well, what is it?
I'm kidding.
25 now.
I'm going to take 20, dude. Yeah, I'm taking 25 cents.
Might as well.
Might as well. I might as well take. Let's just pay commissions, make it break even, huh? All right. I'll let it pen. I'm going to let it pend for 30 cents. Okay. I'm going to do this. I'm going to let it pen for 50 cents. How about that? I'm going after 50 cents today, but it's for the profit trap potential. So I'm going to let this pend. It's a 0 DTE. If price comes back a little bit, cool. I'll get this one filled at 50 cents.
Okay.
So
that's a little better.
That's a little better, he says. Okay. All right. It's a wild trade. This would be, so it's an 8. Let me see where I put those strikes. That was a 18,890. All right, I'm going to throw this in. If anybody in the Pulver Alert section wants a piece of this, this is an index trade. Let me share this chart. So 18890, 18890, sell, call. And then I did, let me check those other strikes. 18875. Buy call, and 18920. I think that's what I did. Yep, 18920. Oh, fudge. Darn it. 18885. Sell call. And then 18875. Buy call. And then 188,920. So it's 10 and it's 30. Yeah, or 15 and 30. There we go. So 18890, 18875, 18920. Buy call. This is for 50 cents credit. So broken wing butterfly. 50 cents. So it's a $50 tail credit, $1,500 max profit in the profit trap, and the $1,400 max risk. So it's a little unconventional. I might not get filled on the trade at all, but for $50 today, you know, I'll take it. If I see price oscillate and give me a fill on that, great. If not, yeah. So I'm gonna say I would issue the trade. But it's, you know, 11 o'clock, we're live, and this trade, if it continues to push lower, if NASDAQ continues to drop, there's no way this trade is going to get filled today. So I think since we're doing it live here, like it's a little trade I'm throwing out there. If it works, great. I get filled at 50 cents. It's trading right now at 30 to 35, but that bid ask must be pretty wide. I mean, I've got $1.30 to 30 cents to 75 cents. We're a little wide on the bid ask, but yeah, I'll keep it there at 50 cents, man. We'll see what happens.
Yeah. Well, hopefully it does come up for both of our sakes. But
yeah, I agree. I'm going to take. Let's see.
Just roll with it, I guess.
Sure.
That's pending. Puts in play too, but we are.
Do we have to go? Oh man, that was fast. All right, I'll throw this in. I'll throw this in my alert section for the Discord, just in case if it cancels, I'll make an update and I'll edit the post. But that was fun, dude. I like you calling me out in this trade, calling me a hypocrite and everything.
We got to keep it real here, you know.
That's right. That's right. Okay, cool. Well, the big thing I'm watching is this too. I do want to watch this ES trade because if we do get into that profit peak, right now showing 720, so I'm profitable on the trade by about $1.20. But part of me, so it's interesting. Like Frank, you're kind of cheering on a move to the upside, and I'm kind of cheering a move into the downside because I'd like to see if I can get to that profit trap and turn this into a big fat profit today. So may the best man win.
Hopefully we both can somehow.
Yeah, somehow. Well, if it pops up for you to like kind of mitigate and take your day trade loss, and then it fades back down to Friday's low for me. That's what we need. Cool. Okay, man. Thanks for being with me. Let's do this again tomorrow.
Yep.
All right. Thanks, Frank. See ya.
Thank you.
Bye.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello. Welcome to the 11 o'clock segment of the A1 Trading Show. Hopefully you guys can hear me. I'm pretty sure I'm all set up and good to go. If you're having any problems hearing me, go ahead and drop it in the chat and let me know. All right, so as far as what I'm looking at today, right now, I would have loved to have grabbed a scalp in this area here. buying it up, but I didn't get the opportunity. I'll show you exactly what I would have been looking for here. I was waiting. So you can see this bit of head shoulders pattern that we have playing out here. Shoulder, head, shoulder. I was being a little picky, didn't necessarily want to get in right here just because we started to reject this shoulder. So I wanted to see another head and shoulders pattern form here where we have this shoulder, head, shoulder, and I would have loved to have gotten in here. However, did not get that opportunity, so this trade has gone without me. At this point, there may be some other opportunities that are coming down the line. Let me go back to the 5 second here. So this will be the next little scalp opportunity that I'm looking at. A couple ways could potentially take this. What I like to do is identify areas like this on something like the 2 minute, the 1 minute, where we've created a bit of structure. And then obviously, you know, if you guys have been following me when I pop up on this show every week, you know that my favorite pattern is the head and shoulders pattern. Now, this will be a reduced risk trade because I don't have the best reasons in the world to take NASDAQ long. I'd much rather be on the short side of this. But the trade idea is pretty simple. Actually, this would be a decent area to get in. Too big of a rejection candle for me to want to jump in now. Yeah. So what I would prefer to see is something like this. We pop up, touch the top of this structure here, pop back down, and then we get some rejection in this area on the 5 second. That would be my ideal scenario. And then if we're getting decent rejection in this area, decent little bit of structure on the 5 second chart, then I'll just quickly scalp it out of this into this little leg with the potential for us to reverse at the top of this area here. Now, this is all technicals because the CPI data this morning came out in a way that tells me we should have been discounted on price on the NASDAQ after that data released. And we had this bit of a funky whipsaw bit of price action here, which to me makes perfectly good sense. The data this morning wasn't incredibly ground shaking. It was sort of mediocre. So with a bit of a mediocre print out of CPI, this makes sense. But with the CPI leaning warm-ish, this also makes sense. Now, as far as whether or not it's a sustained move to the downside, that I don't exactly. I'm not a big believer in the rest of the day we're going to experience a sell-off. I kind of anticipate something like this where we're messing around in this area. Maybe we pop back down to these lows, pop back up, and we sort of just. I think NASDAQ has potentially gone as far as it's going to go south today. Now, that's not. It's not to say we can't break and hold below these 18.5 levels, 18.6 levels. I just don't necessarily. I don't think the data that we got today is going to be enough to do that. So my anticipation for this for the rest of the day is that we will hang out somewhere in this range. The other approach sometimes that I like to take is this initial hook into the shoulder. So we haven't touched the neckline of the shoulder, the top of this left shoulder, but we've come in and now we're about to potentially hook under hook into this shoulder area, this price level, and then from here, bounce up, touch the top of this area. So how would I get in on this? I identify this potential opportunity on the 30-second, and I come over to the 5-second, and I want to see something on the 5-second that gives me a reversal indication. So for me, right now, a potential decent opportunity is going to be this push into here, a hook, a retest, and a push out. If we get some rejection, which we are. It's tempting to get in this, but I'm also live and don't necessarily want to try to be hyper scalping while live. How those could be a decent opportunity here. All right, so let's go ahead and jump over to the Doxy and see how that's faring currently. Doxy holding some of its strength following the CPI print. Granted, it does look like it's stagnated here at this 101.75 area, which makes sense. And again, my follow-up idea for CPI with where price is at now, moving into the last hour of London session, I could see, and with the muted data that we got, I could see this. I could see price hanging out in this little flag for almost the rest of the day. Even if we slightly break to one side or the other, I could see it just kind of not really being able to identify a solid continued push in an upwards direction or a real solid fade of the CPI reaction. So as of this point in the game, I'm seeing consolidation everywhere. But the way that I trade on these incredibly lower time frames means I can take advantage of that consolidation because I'll be grabbing little legs like this, like I was just explaining on NQ. Now, granted, I could call it a day. I've had a pretty good morning this morning. Just grab something out of this little section here. Bro, just buy US 30 right now to 42.55. Let's go check US 30. To 42.55. Yeah, I mean, it's pretty much, how long ago did you say that? 11:12? Well, about a minute ago. I mean, that's pretty damn close to where we're at. I got that message right in here at 11:12. I mean, that's a tough call because I don't really have a reason to be buying Dow in this area. Similar little bit of price action as NASDAQ, but not as clean on the structure side of things. But good job because that trade is almost a TP if you got in on that. Are those low time frames consistent? Yeah, so the thing about price action trading when you're just trading off of technicals, like the reason why I trade these lower time frames, it's twofold. One, when I'm trading data releases, I mean, I'm getting in within 10 seconds of the data releasing, 10 to 15, depending on how the market's reacting. So that's strategy one. My main strategy is trading the difference between where price is at before data drops and where it recalibrates and adjusts to if we get surprise data. So that's way one. Way two is technical analysis on these lower time frames. And the reason why I trade these lower time frames is because I like to know really quickly whether or not my idea is right or wrong. I don't like to sit in a trade for really anything beyond 10 to 15 minutes. It's not, I don't like doing it. I'd rather get in on something like, let's say we're at the top of this range here, the top of this shoulder range that I was talking about. If we got a solid enough rejection here, I might throw in a 0.1% of risk from my account off of this. It's a price action only really reason. There's no real other catalyst or things happening in the world that's making me go, I want to sell NQ from here. It is purely a price action trade. So when I'm trading pure price action, I lower my risk. And yeah, as far as consistency is concerned, when it comes to price action, it's just price action is fractal. So the patterns that play out on higher time frames also play out on lower time frames. It's just a matter of how long is that trade going to take to prove your idea right or wrong. For some people, trading on this smaller time frame is way too stressful. They don't want to do it. They don't, oh man, price is moving way too fast. I just lost 0.1% of my account within 30 seconds. This scares me. I need to not be in this. And I get that. It's completely fine. I pay a little bit more attention maybe than others do to, when we're coming up on major time changes, like from 11, like if I was looking at a trade at 11:45 or 11:14 in 10 seconds, and it's setting up perfectly in the pattern that I would like to trade at a area of resistance, but it's coming up on that new 15-minute candle, I have to be aware of that so I don't get caught out as that new candle drops. Because when new 15-minute, even 5-minute or 30-minute candles drop, it can get really funky. Price action can get really funky. So you want to be aware of that. It's almost like if you're trading on higher time frames, being aware that in the next 42-ish minutes, 42 minutes from now, a London session is going to end. And that 12 o'clock candle, there could be some volatile spikes as soon as that 12 o'clock candle drops. So you need to know that if you're trading on like the 1 or the 2 or the 3 minute. It's the same thing with trading on these 5 seconds, 15-second charts. You need to know when the next major time is about to roll over. Not because it's guaranteed that there's going to be volatility, but because if there is volatility when that time drops and you're in a technical only position and it goes against you, it could go against you really hard, really fast. So you just want to be protected. And so for me right now, a prime opportunity that I am looking for would be selling this off of a right shoulder if we get the proper indications. And it would look something like this. Let's see. In an ideal world, it comes up and taps into these highs here. And we set our stops a little bit outside of this head. And we go for, a nice little 1-to-1 or a 1-to-2. 1-to-1. I like to go for 1-to-1s and close out partials. And once I hit that 1-to-1, I close out partials and move stops to break even. If it comes back up and tickles my break even stops, maybe pops up above it, but then gives me another rejection, I'll go in with another small bit of risk, same stop area, same targets. And then if it never comes back up and hits my break even, what I tend to do is just let it ride, create these lower highs, boom, move my stops, creates lower highs, boom, move my stops, and then eventually I get taken out. But yeah, to answer your question, absolutely. It's just as consistent as any other time frame. It's just a matter of knowing if your idea is right or wrong within 30 seconds to a minute, or knowing if your idea is right or wrong within 5 minutes to 30 minutes. That's the only real difference. So yeah, I like the 1 second chart in 1 minute. Usually I can detect really good entries. That's awesome. Yeah, 1 second chart is cool. I like the 5 second. I hang out on the 5 seconds, pretty much the lowest I'll go. And I like to identify the opportunities based on like the 2, the 5, the 3, even the 1 minute. This is a prime area right here. And if I wasn't live talking through these ideas, I likely would have gotten in up here. It definitely adds another layer of like performance challenge when you're like live trying to scalp this stuff. So I'm probably just gonna fight the FOMO here a little bit, the fear of missing out on this trade, because this could be actually a pretty decent trade here. But I'm gonna fight that so I don't make any mistakes while trying to present and trade at the same time. So but yeah, that's basically how I would trade NASDAQ out of this area, how I like to trade when I'm scalping price action. And let's see, what do we have coming up this week for the rest of the week? We got the Euro ECB meeting, PPI. Probably not going to trade PPI. Tomorrow I'm going to focus on the Euro meeting. That's basically it for the rest of the week. Data recently has been a little lackluster. And if you guys know anything about this and you want to correct me in the chat, feel free to. But I'm having a bit of a challenge right now with the doxy on a larger time frame kind of approach, because my concern with both of the presidents that we have potentially, either one of these two candidates, whoever wins, it doesn't look like it's going to be good for the inflation side of things. If I'm wrong, please correct me. But I'm pretty sure either way we go, if we get a Trump victory, inflation in the short term at least is going to suffer. If we get a Kamala victory, inflation in the short term is going to suffer. And I say is, has a very high likelihood of suffering, I think, under either one of these candidates. So if inflation's going to suffer, it's interesting because that sort of challenges the softening economic data that we're getting, that's leading the market to price in so many cuts. So it's sort of like this doxy bear idea from the economic data is getting challenged by the geopolitical tensions right now. It's making projections on the doxy a bit challenging. Noor said, I have a question. Go ahead and ask your question. Feel free. Shashi said, after reaching your desired place, what things you look for before placing a trade? So for me, most of the time I'm looking for price to enter a certain area and then give me a reversal indication. And the stronger the reversal indication, the better. Like for instance, this trade right here, this would have been a decent trade, but it would have been even better if price had tapped up into the high of this shoulder. For me personally, I would have liked to have seen price tap into the high of this shoulder, reject it, tap maybe again, reject it twice. If it's rejecting it twice, cool. I'm willing to go ahead and allocate a little bit of risk to this idea, not just because it's making a head and shoulders, but because it's making a head and shoulders at a point of at a very important point in price action. We see this big drop out of this area. Price tried to rally, couldn't even meet back up in that area, and then eventually dropped off like crazy from this zone. So this is a very high impact price level. We look for a reversal pattern at this price level. Now on the 5 second, we get this head and shoulders. Maybe on like the 1 minute or the 2 minute, we get some sort of a evening star pattern or something. I mean, you kind of have a bit of an evening. You definitely have an evening star right here, where price pushed up, gave us this doji, and then closed more than 50% of this candle here in the downside direction. But at this point, the trade is already gone for me. but it's just an idea of another kind of pattern that I like to look for. My main patterns that I like to identify are head and shoulders and like evening or morning stars. Those are my favorite patterns at points of contention, I like to call them. Points where price reacted heavily on a bit of a higher time frame, even if it's just something like the 1 minute, because I'm trading on the 5-second. So any sort of strong reversal pattern in this area, it's good enough of a signal for me. Now, again, I'm scalping the 5-second. So if we get price, now price is coming into this area, arguably you could draw a box here. And potentially enter early as it taps down into this zone. If this goes from here, I'm going to miss this trade. It's just, it is what it is. I'm not comfortable entering at this level because again, I'm trading on the 5-second. I would prefer for price to come down into here, give me a double bottom, give me a head and shoulders, give me a nice wick, retest again, rejection, head up. And pretty much just looking for a rejection of this price level in the direction that I want to take my trade. That's all I really look for. How would you know when the market is going to reverse? So you never know. You know, that's one of the basic principles of trading psychology is you don't know. You never know. That's why you manage risk. You can identify areas where there's a higher probability, but you'll never know for sure. Like there's never a guarantee. So you always want to protect yourself and not go in too heavy on any one trade. But you identify areas. For me, it's based on where has price reacted from before in a massive way. So price reacted from this level in a pretty intense way after tapping here. Price tapped here and then moved all the way to this zone from here. This is the last major high before this big leg to the downside. That tells me there's a massive price. I don't know if you want to call it mechanism or there was action here that was sustained. And so when price moves back to an area of sustained price action, I am going to be looking for another opportunity to take trades out of that area. And that's basically the way I like to trade. Support and resistance. When it comes to technical analysis, like for me, what I've found, been in the markets for 7 years. I know I have a lot of lines and stuff on my chart right now, but this is much simpler than I've kept it in the past. You know, a few years ago, I may have had EMAs and all sorts of other things on the chart. Now, there are times where I will pull out a fib. I like to pull out fib levels from time to time and utilize those in some of my technical entries. But technical price action trading is really a function. I think it all boils down to tape reading. You've got to spend time tape reading. I've got 7 years in the market, and out of those 7 years, I think there's like 225-ish days, trading days a year, maybe more. I've probably spent at least 200 of those every year for the last 7 years, 200 days a year, like watching tape reading for at least an hour, much more than that. But, at least averagely across every single day, it's probably been at least an hour. So you come to be able to tell the story of price via tape reading, and then you're able to identify really high probability opportunities via tape reading based on that experience. So it kind of snowballs. In my experience, it is all snowballed over years of practice and watching price and seeing how it moves. And I'm not one of those people that thinks that when it comes to the 5-second, I think you can find an opportunity basically across any asset Now, I will say with futures, it's much easier to trade these incredibly low time frames because the spreads and commissions are so low, so you can afford to trade these super low time frames. Back when I was just trading Forex with like CFD brokers, the spread would not allow me to trade this way, which this is my preferred way to trade. There's a book called Thinking Fast and Slow, and it sort of illuminates you to some psychological ideas behind people that are able to think fast, or people that think, they process things better when they think slowly. I'm a fast thinker. I'm very much, I have an idea, I want to execute on that idea, and I want to know whether or not my idea was right or wrong very quickly so that I can move on to my next idea. And it's always little layups, never going for home runs, never saying this idea is going to make me $1 million. It's like, no, this one idea might make me a few hundred to a couple thousand. And that's it. A max. I'm not swinging for the gates. And a couple thousand is a really good, strong idea that ended up blowing way past my targets. For the most part, it's usually under 500. So never going for the Hail Marys. I don't trade that way. I go for these little layups. Cool. We got this head and shoulders pattern at a point of contention here. Sell it out, grab a couple $100, move on to my next idea. Okay, my next idea would have been to look for another reversal pattern down here in this zone, grabbing hold of this right shoulder. Never got that, so cool. Now I move on to my next idea. Well, my next idea right now, it's a little lackluster because I don't necessarily love trying to trade again out of this area. But if we can get another head and shoulders pattern on right here in this area, there's no reason why I can't take it for a little scalp to these levels, maybe these levels here. So that's why I trade the way I trade when I'm trading price action like this. Lets me know real quick whether I'm right or wrong, and then I move on to my next idea. I find scalping FX to be much more difficult than QQQ, less inertia. Oh, for sure. Yeah. So scalping currencies, when I'm price action trading, I prefer to scalp something like NASDAQ or QQQ or SP, like some of the equities. 110% is way better. Now, what I love about trading currencies, when it comes to equities, there's a little bit of a mental buffer for me when it comes to how I process how economic data affects NASDAQ. NASDAQ being my preferred equities. So if we get a piece, like let's take CPI this morning, for instance. CPI drops, and let's pretend it came out incredibly hot. Just floored it to the hot side. Inflation is scarily high off this last print. Plain pretend. I know for a fact, or not for a fact, but I'm really confident in the fact that the doxy is gonna go bullish. So the currency is gonna go bullish. I'm very confident in that fact when CPI comes out hot. And I'm also confident in the fact that I can pair the doxy against maybe a weaker currency, like, or not maybe necessarily a weaker currency. I could pair it against a weak currency if I have something like this morning was a perfect storm, pound weakness based on the GDP information out of the UK this morning. So we had pound weakness from GDP figures, combine that with combine that with strong CPI. It's a perfect reason to sell, to scalp the British pound. It's the lowest hanging fruit. The price has to recalibrate as new data hits the market. I'm going to take advantage of that real quick on the currency side of things. But if I'm just trading price action technicals, QQQ, or for me, it's NQ all day on the futures market. Way more movement, better. I don't want to say better opportunities, but more opportunities. There's more price action. There's more chances for me to get in on a decent entry. So yeah, I prefer that as well. What do I think about bot trading? I think at some point in my trading career, if I can willpower my way through it, I will be learning how to code bots, like write scripts for trades. And as long as I don't know if that's allowed in futures, I'm pretty sure it is. I have to double check. But it's incredible because there are certain trades that I would love to be able to program. Just ideas that I've had over the years, where it's like, I want to take this one specific trade at this one specific time every day over the course of 100 trading days. But I know I'm human. I know I have life responsibilities. I'm not going to be able to trade that like a robot. So there are times, and that's just one minute example of a time where a robot would be an ideal opportunity to trade. It would never fully replace my trading because I am a discretionary trader. I like to make my own decisions. I trust my intuition about a lot of trades. Um, but to be able to add in bot trading, absolutely. I think it's an incredible tool for traders if you can learn how to. There's a prop firm, like a real life prop firm, not to crap on prop firms, but the prop firm, as it has historically been known prior to the last 10 years, as a actual office space that you walk into on Wall Street, right? There's a prop firm called S&B Capital on Wall Street, and part of their training program is, or it used to be, I don't know if it still is, but at some point in time, the last time I looked, they had three routes that their traders could go. You could be a discretionary only trader, you could be an algorithmic trader, or you could be a hybrid trader. I've always thought that's incredible. They have their guys come through their training program, and you can choose. I want to focus solely on discretionary trading. I want to focus solely on building out scripts to take trades automatically for me. Or I want to focus on a hybrid approach where I take some discretionary trades and I also build scripts, write scripts to get me in and out of trades automatically. So yes, very, very emphatically a supporter of bot trading. I'm not a huge supporter of buying somebody else's bot, simply because I like to approach the market with my own ideas. And I think as traders for the long term, you want to work on that muscle as much as possible to build yourself up as a performer. This is a performance sport. Trading is 110%. It comes down to me managing my account. That's it. That there's no other, not that no other factors come into play, but ultimately, anytime I'm exposing myself to risk, I have decided to expose myself to that risk. So it's a performance sport. It's all based on my performance. So with that in mind, I don't want to go buy somebody else's thesis for trades and then win off of those. But then all of a sudden that thesis doesn't work anymore and I have nowhere to go because I didn't develop the thesis. So I don't have that muscle of developing the idea. So all about learning how to code and script and write your own bots, 110%. I'm not about buying somebody else's bot. That to me is it's similar to taking signals, which I'm not a big signals guy. I'm not, I'm certainly not going to knock anybody that does signals, but again, it's a build that independence muscle. If there's a good signals provider or even maybe a good bot out there that you want to buy, for sure. Again, it comes down to you. It's your decision. It's your trading. You have to decide what is best for your account. But personally, my bias would be if you can have a hand in the formation of the idea, if you can have your hand on the wheel per se as you're building out a bot, I think that's your best bet, because then you can adjust the bot to fit different parameters if it's performing well or not performing well. You can build other bots as new ideas come up. So yeah, big supporter of bot trading. Yeah, you would need to code if you know how to. You would need to know how to code if you want to create your own bot. Absolutely, yeah. So that's what I was saying before. Is at some point in my career, I would love to. I'd love the idea, I should say, of setting aside time, like 9 months to a year. If it might take longer than that, I don't know, to learn the script building, the code building things. I started to teach myself back in 2019. um like I started to learn how to code. I taught myself how to code within like 100 days. There's like a challenge in the coding world, or there used to be. It's called like 100 days of code, and you can, over the course of 100 days, you can get pretty good. Like I knew nothing about programming, and then at the end of 100 days, I mean, I could build websites and scripts from scratch. It wasn't in the language that I needed for trading bots. That's a completely different kind of coding. But I think if I set aside the time, I could do it. And anybody, if you're maybe not anybody, but I think if you have the wherewithal to understand price movement, calculate numbers, do more than maybe just draw lines on the chart. If you can, identify, statistical advantages to certain entries and things like that. I think if you have that level of intelligence, it's really just a matter of putting in the work to learn how to code in order to build your own bots. At least for me, I consider myself to be of relatively average intelligence. And I'm like 99% sure it's just a matter of actually going, okay, over the next 90 days, I want to learn how to program a bot. And that bot is going to be super simple. It's going to get me in a buy position. I'm just making something up for a silly scenario. I would not actually build this as a bot, but let's just say it's a great example. Comex, I believe they open up every day at 8:20 a.m. my time. And, just for, again, craps and giggles here, let's pretend at 8:20 every day, I wanted my terminal to get me in on a gold buy to take advantage of the Comex open. Terrible idea, because it's, just because it opened doesn't mean it's going to actually buy up, but just to play pretend. That would be a relatively simple place to start. So right here, 8:20, market opens. I want to immediately be put into a buy position and maybe taken out within, we'll call it 10 ticks or 10 pips. That would be what I would think would be a relatively simple bot. It's, again, I don't know exactly what I'm talking about because I've never built a bot, but the idea would be, okay, this time triggers for the bot. The bot triggers a entry position, risking, a tenth of a percent, and it gets me out within 10 ticks either side. I'll go for a 1-to-1, and I'll call it the Comex open bot. And every day at 8:20, regardless of whether or not I'm awake or asleep or at the beach or at my mom's house or whatever, at 8:20, my bot is automatically going to get me into that trade. Could be a cool little thing to build out there. All right, let's see. Nick starts some real talk and people leave the stream. It is what it is. Project and anticipate. All right, guys, got a little long-winded this morning talking about a bunch of random stuff, trading bots and all sorts of stuff like that. Yeah, so like I said on NASDAQ when we started the stream, I don't see us making a continued sustained downside move. I see us kind of hanging out in this area for pretty much the remainder of the day. Now, this is a pretty decent little push back into this zone, but I could see this being a search for equilibrium. The market sort of looking for that. I mean, it's almost back to where it was trading before CPI dropped. And again, CPI came out slightly warmish, but kind of mixed. And I think we're seeing a pretty typical reaction off of the kind of data that we got. So you have this initial spike from that hot CPI. Market's like, are we really sure about this? And it's like, oh, yes. New York Stock Exchange volume comes in. Yeah, we are sure about the fade. Oh, well, are we sure about this much of a fade? No, probably not. And now we're just back at equilibrium, trading where we were before the okay-ish data dropped. So, yeah, I don't expect a ton more directionally out of NASDAQ today. But if you're trading on lower time frames, I mean, it's not a bad area to start trying to like look for sell scalps, but it's not a great area either. I think for me, a good area would look like this 18,825-ish. Right in here. Kind of at this, you got resistance, support, resistance. Pretty strong area. And if price wants to tap back into that zone and give me a reversal signal on the 5-second, 15-second, I absolutely would love to sell it out of there, at least back down into these lows here. But all right, guys. If you don't have any more questions for me, I'm gonna go ahead and call it. Jacob said we could see NASDAQ become green. Yeah, I mean, that's definitely not out of the equation. Like I said, when it comes to NASDAQ and the impact that CPI or other economic data has on it, sometimes I feel like the nuances of that do escape me just a bit. Meaning, like I know there's the general ideas, but it's not as intuitive for me as like currencies are. So as far as how the CPI data today affects NQ, I want to say it should make it a little bit of a challenge for us to have a green day on NASDAQ. But the markets could prove me wrong on that. Absolutely. Yeah, Jacob said currencies are hard to trade. I failed so many times. So yeah, for me with currencies, like I said, that the best opportunity I've ever found in 7 years of trading currencies has been the it's kind of, I've kind of like coined this a recalibration term, like and it's super intuitive to me too, because when economic data drops for the US, it is going to have a direct impact on the US dollar, right? Most of the time it should. If it surprises the market, it should have a direct impact on this. So let me see if I can pull up my trade triggers here. This is how I tend to this is how I approach data ahead of it dropping. GBP, we'll take the pound data from this morning for GDP. So we have the forecast for GDP. We have the previous numbers for GDP. We have the low of the forecast range from the major financial institutions, and then the high. Now, I set up two potential scenarios, a contractionary scenario and an expansionary scenario. There is a third and fourth scenario that I can talk about in a second. Expansionary scenario out of the pound for this specific data this morning would look like every piece of data coming out above the high. So we want the 3 month over 3 month, the quarter over quarter GDP to come out above 0.6, the month over month to come out above 0.3, the year over year to come out above 1.5, again above these highs. Same with the services month over month and the services year over year. Now, vice versa for the low, coming out below the lows of the forecast was acceptable for a trade, but there are some of these where the previous is lower than the low estimate. So take, for instance, month over month, we have the previous of 0.0 and the low of 0.1. Well, if it comes out at 0.0, it's going to be the exact same as the previous. Below 0.1, it could lean contractionary technically, but it's not like I wouldn't consider that a surprise. Now, if we had a negative 0.1 hit the actual, that's below both the previous and the low. Good to go. That's a surprise print for the market. Same thing with estimate year over year. The lowest projection was 1.3, but the previous was 0.7. So if we got something like 1.0, it's sort of like a toss up. It's like, well, it's lower than the expected, than the lowest of the expected range, but it's still warmer than we previously had. So there's a bit of growth compared to the last print, but not as much growth as would be expected. That's a little muddy, right? And so when things get muddy like that, it can be a little difficult. But basically, I set all my ideas up exactly like this. All of the data points that are coming out, and then when it drops, then I can take the trade. So this morning we got almost everything we needed for the contractionary side of things, and then it's very simple. If you look at the pound, I took this trade this morning off of the pound data, and then when CPI dropped, we had weak pound going into this was a little bit of a cheeky entry. I'm not gonna lie to you guys, a bit of a cheeky trade on my part, taking this this New York session pound sell off of CPI data. I took it because you're about to see my favorite pattern: shoulder, head, shoulder. I actually got in over here after we rejected this shoulder. Stops above the head, and I took it to this low right here. So that's the way I trade currencies. It's very simple, very intuitive to me. Inflation comes out hot. The central bank is going to be tempted to raise rates. Inflation comes out cool. It's going to lean in a more dovish tone, and I get in directionally based on that kind of data. Are you a fundamental trader or a technical one? I'm a blend. The way that I trade is when I have two strategies that I trade mostly. The first one is it's a hybrid blend: fundamental bias, technical entries. Perfect example being right here. My fundamental bias going into this trade was built off of two ideas. One, we had the pound weakness out of the GDP print this morning. Two, we had dollar strength out of the warmish CPI print today. So price did this initial whatever this is, and then I wait for a decent technical entry. I have my fundamental bias. I'm looking for pound sells. Now I'm looking for my opportunity. Okay, so price came in here, nothing yet. Oh, okay. Well, we've just made another higher high. Maybe, yep, sure enough, we came down here. Now, are we going to get this right shoulder? This is the moment where I start identifying that an opportunity may be about to present itself. Okay, price comes back up into here, pushes through pretty strong, and I'm like, it might not go. It actually might pop back up in here, maybe do a double top, and then come over here and give me a right shoulder. Or it's just going to come up, blow past this high. Maybe I'll look for another head and shoulder opportunity over here if we get it. But basically, the idea is fundamental bias, technical entry. I got my technical entry signal once we rejected this right shoulder, jumped in, stops above the head, and I took partials off at 1-to-1 and then let runners go to this little line here. So yeah, a bit of a blend. Do I think the euro is short-term bearish? Personally, I don't have a good answer for you, and I don't like to give an answer when I don't have a good answer. I think if we fundamentally, I'm a little out of the loop on the euro. I don't have, off the top of my mental Rolodex, I would have to search through some data and refresh my mind on what's going on, which I need to do anyways because we have the Euro Central Bank meeting tomorrow. But I don't want to give you an answer to that just because I don't have a real solid answer for you. So yeah, I'm gonna skip that question, and I can come back to it on Friday. If you're on the show Friday, ask me again. I'll be on at 11. And at that point, we'll have traded the ECB tomorrow, and I'll have the euro freshly on my mind. All right, guys, I think I'm reaching my time limit here, so I'm going to go ahead and call it. From everybody here at the A1 Trading Show, thank you for showing up, and we will see you on the next one.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.